Hey, good morning, everyone. Hope you guys are able to see my screen and hear my voice. Please confirm. Okay, great. I think we will give another like in 3-4 minutes and then we'll get started. In the meantime, I'll be on mute. Okay, so team, good morning, everyone. Welcome you all for the day 2 of this 20-day mentoring program. In today's session, we'll be looking at some key aspects in terms of how the markets is going to be behaving, what are the things which we needed to see, and today's presentation is going to be based on the connect the dots. So this is like something which has been like very close to me, because this is the concept which I initially originated, which has now gotten some shape in terms of the 2 candle theory and other things. But you needed to know how and why Shiva like can pick the option like in buying, and why I'm doing option buying rather than selling, and what are the pros and cons and other things. Today morning, if you'd have seen, I would have like in shared in what to say, like in a story wherein a trader lost like in a big sum of money buying in stock options and other things. Guys, why we have been insisting on people not to be like in carrying what to say, like in stock options, or like in don't trade too much into stock options and other things. I'll just give you a small like in a story about that. When I initially started trading during 2007-8, during those days I used to be like in I used to be trading a lot of penny stocks. Okay, when I'm using trying to take like a lot of penny stocks, something which will be moving from 30 rupees to 40 rupees, 30 to 40, those kind of levels in intraday itself. Okay, so those were like imagine if you're buying like in 50,000 quantity and like in 30 rupees, you will immediately get like in a large profit when it goes to 35 or 40, and that used to be like a lot of fun. But the problem is, even those days, if there is going to be like in there are like in what to say, the stocks which is not part of FNO will have circuit limits. The circuit limit will be like in 5%, 10%, and 20%. there are days wherein we have seen like an extreme volatility. When I say extreme volatility, you will see the stock moving from like an upper circuit to lower circuit to upper circuit. We have had days like that. Imagine if you are an option we used to like short the stocks as well, thinking that like somehow it is going to be falling and then I will get a buyer at the lower level. That's the same way like I did that. Okay, there was a day wherein I was buying Unitech shares. Like in Unitech on those days, like in the reality, and it used to be like in having a lot of volatility. I believe like I bought it somewhere around like in what to say 30 or 40 range, and I had like in close to like in 10,000 quantity or something. By end of the day, it went to the lower circuit. Okay, it went to lower circuit. That means from like in 30 or 40 levels, it went to like in 25. Imagine 25 odd levels. I don't recollect the exact scenario. It closed in the lower circuit. What has happened once it closed in the lower circuit? There were no buyers, so that whatever the quantity which I bought, I was unable to sell it. And I used like a broker margin to buy intraday. I was using the intraday leverage where the brokers were giving like in 3x or 4x to buy like an additional charge, because you have 1 lakh and the broker will give you another 3 lakh for you to buy like in stock. At the end of the day, you needed to square off your position. That's the deal which you have with the broker. I couldn't do that. So what the broker did the next day, whatever the capital which I had, that was like completely frozen. Right now, next day, if the stock doesn't have any buyers, they will be sending it for auctions. When it is an auction, you don't have any control at all. Say, for example, the auction buyer will say, if the closing price is around 25, he will say like, I'm ready to buy it at 20. If someone is ready to buy it at 20, you don't care about anything. They will just give it to that option, whoever is the guy who's coming in at 20, they will buy it. So what will happen? You would have bought it at 30. The lower circuit would have been at 25, but the auction person would have bought it at 20. So the exchange will levy some penalty, and then they will collect the entire amount from you. So in this scenario, just because the broker gave me a leverage, I bought it, couldn't close the position, went into auctions, and then made a huge loss. That was one lesson learned in between, I think it was in 2009 or 10, because those days it was really volatile. Then I realized, okay, what is the game which is getting involved in stocks and stock options, especially stocks which doesn't have any liquidity, when it is purely operator driven, another thing. The reason for me to focus on index and index options is purely this. You don't have much of obligations compared to that. Yes, option buyers will have limited the liability compared to the sellers, because if there is going to be a black swan day, you will see the sellers getting butchered left, right, and center. But at least as an option buyer, you will only lose the capital deployed or the premium at which you bought it. But many people have the perception that and that is the case with all scenarios. No. What SEBI has done recently, the SEBI's new circular, I don't know how many of you are aware. Okay, this is the main reason why I keep insisting the people don't try to trade in illiquid stock options. And this was supposed to be like an illiquid stock option, but illiquid stock options, the problem is plenty. And that too, in the last 1 week of the expiry, please do not even bother to take a trade in the current series. So this is one story which I shared it with you. What Dinesh has done here. Dinesh has bought some put option in the last week of in the last expiry, December 30th expiry. What SEBI has told very clearly, in case if you're buying something or selling something, and if it is going to be in the money, and if you're not squaring off your position, you needed to ready to take a physical delivery of those shares. Only if you have that much capital in your account, play on that particular stock options or in futures or in stock stock futures or stock option. But they thought it is a similar story to similar to index futures and index options. They bought a stock option, and even though it was supposed to be only 35 paise, it was in the money with only 35 paise. They don't care about whether in 35 paise or anything. It is in the money. Then you have to be ready to buy or take the physical delivery of shares. Unfortunately, he is a small time trader. He doesn't have like a money, and he has already lost plenty, and he was using the last options to trade on like in a gambling. Guys, this is what most traders do. What they do, they try to like and think, I can buy a stock option at like an 10 20 paise or 50 paise, and it can go to 5 rupees. Guys, not always it happens. And with the SEBI recent changes and other things, I know this is like completely against the retailers, because it was supposed to be not at all like a good option for someone who just wanted to. Why they are doing that? They wanted to discourage people from buying something which is like an illiquid, okay, something which is going to be expiring worthless. Why you wanted to go and buy it? The main reason why the derivative concept came into the picture, you needed the derivatives to hedge your position against the cash market position. But what 90% of us do, not 95, 90, 99% of us do, we just use like an either a naked option buy or naked option sell. We don't hedge it against our position which is available in the cash market. So this is the problem with many. Okay, guys, like an auction process, it is like an there is a process involved, but I'm not sure whether like in everybody of us will be able to participate in the auction market. That's not going to be happening. Okay, so never ever try your luck in stock options, especially if you know that you do not have capital to take physical delivery. Otherwise, you will have a lot of penalties to be paid. So say for example, if you remember, I was taking an ICICI trade like a few couple of months back or 3 months back. I've taken some quantities of around like in 10,000 or something. You know what I did immediately? I ensured that I have sufficient capital in my like in a broking account in case if something goes against that trade, because I was playing in the last week again. Okay, so I was having sufficient capital on that particular day, ensuring that in case if someone is like an if I'm not able to get it, I needed to ready to take delivery of the ICICI Bank shares. So if you know that you are able to take it, then do it. Otherwise, please, please, please avoid the stock options completely, guys. I have bear the brunt like an in like in stocks, like and I've seen people bearing the brunt in like in stock options now. So these are like an at least like an I'm telling you, if you touch that, that is a fire. If you touch it, it will like in pain for you, or you will burn your fingers. I've already burnt once, and yeah, I'm telling you that there is a possibility you can also burn it. But what many people think, no, 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 Shiva, let me also try touching it and then see whether my finger burns. If you definitely wanted to do it, please go ahead and do it. I can only suggest and tell you these are the problems, and overnight it can completely make you bankrupt as well. Guys, look at this scenario. This is like a Pune based doctor. I never thought a mere difference of 35 paise will bring a loss of 35 lakh to my account. Can you believe someone having like a 35 paise in the money is bringing in a capital loss of 35 lakhs? Okay, this is like a nightmare. There are traders, I will show you certain examples during the session. There are traders who have lost with 1 lakh, they have lost close to a crore also due to option selling. I will show you that example also, don't worry. But there are like in what to say problems in each and every segment, but you needed to know which are the ones which you needed to select, and then you needed to do it. Many people think that option buying, yes, many people think option buying, it is going to be like in a safe bet, I'm not going to have like an unlimited, but you will not have that issue only in index options, not in stock options. Please remember, stock options you needed to ready to take a physical delivery, whereas in index options we do not have that. Okay, that's a reason even I insist on people only focusing on index futures and index options. Do not even bother to look at the stock options. Moreover, 90% of the stock options or the stocks are being operated by operators. There are like in gangs. Okay, there will be gangs who will be operating specific set of like, and there will be a gang who will be operating only 5 stocks. There will be a gang who will be operating only like 100 stocks. I'll just give you like in a small example. Okay, now remember, I will tell you how the operators will be like in playing a game. before, like, and I thought this is going to be very important, because many people, like, and you guys are like, and getting fooled or thinking that, like, and I can make a small penny and other things. But I just wanted to give you guys a rough idea how you will be able to, like, and completely fooled by looking at the buy and sell volume. Okay, earlier I used to do that. Okay, that is how I'm going to be, like, an explaining it to you as well. Get me, like, an one penny stock which is not getting traded much. I want only penny stocks. This used to be my favorite when it was launched in 2008 or 9, actually. I'll see whether it is getting traded. Yes. Okay. Guys, I want something which is not getting traded much. Okay, I'm just going to be, like, in adding few stocks. Let me see which are the ones which is fluorochem is, like, in a big one now. Anyway, those days, like, in none of them would used to trade it. There are some stocks which will be going in, like, in a completely what to say, in upper circuit or down circuit. So, like, you needed to be, like, really really careful with them. Okay, if you look at this, all these are, like, in having some lot of, like, in buying and other things. Okay, there are certain stocks which will have, like, an TTML, like, and that is, like, an it is all, like, an highly liquid stocks for me. R Power, the JP Associate, the JP Power, and everything, Suslon, all these used to be, like, an highly traded, like, an what to say, stocks. Can you see this? Look at this particular stock. Okay, I'll just see what is the 73 is the lower circuit. Okay. Now, let me do one thing. Just look at the total bid quantity. I'm just giving you a small glimpse, actually. I wanted to see, okay, let me see this for EL. 840. Okay, I'll go for this. Okay, it is getting rejected. What is the reason? It is not normal product for block. Okay. I just wanted to give you guys a small, okay. Almost blocked. Okay, most of these penny stocks would be, like, in block. Earlier days, I will just give you an example. Why? What they used to do is, you will have a tendency to look the buy and the sell quantity. Okay, what people think is, if I have more bid orders, that means, like, I can buy it because everybody is showing up the interest. But what the operators do is, they place the bid at the lower level, the lower bid level, and then they will induce the buyers to come into the stock to think that, yes, I'm going to be getting something out of it, and I will go and buy it. Even here, look at this, the bid quantity is lesser and the ask quantity is more. People will be thinking, no, this is on, like, on a sell level, I'm not going to be, like, not touching this. But that's a way the operator control it. 90% of the time, the bid and the ask don't go by that. Okay, you always needed to look at the volume at which it is getting traded on that particular day, either be it buy or sell, and then we will take a call. So never think that, no, bid is, like, and more, like, and sell is lower, and then I will go and buy it. How many of you do that? Just, like, and buy based on the bid and sell. Never try to do that. Okay, please understand, there are plenty of risk. Always understand the risk, like, in what to say, you needed to take a trade based on the volume and the action happening on that particular stock. But I would always insist people to stay away from penny stocks or stocks which is not having enough liquidity. When I say enough liquidity, you will not see that stock trading at all for the next 6 months. On one fine day, you will see the stock trading for, like, a 10x volume or 20x volume. That is again an avoid. Why? After the day, the liquidity will be drying up. Okay. After the day, the liquidity again will be drying up. Why that particular stock is getting traded on only one particular day? Because there would have been a news, there would have been some buyers and sellers who would have been active on that particular day. Imagine all these people once again go back and lock their like in quantity in their demat. You're not going to be seeing much of like in trading activity happening on that particular stock. So you will again get stuck thinking that the same kind of an action will be happening every day. Always look for consistent volume trade happening in a particular stock over a period of 30 to 60 days and then trade it. There will be trades which will be like, and I will show you some charts which can help you understand that. When I wanted to remember, I don't get much names. TTML, I will just go with this one, this guy itself. Can you see what's happening here? The whole like a volume was like completely drying up here, and then the volume picked up, and then this guy was starting to travel. Now, after all the volume moves and other things, in the last like in a few months or so, the volume has been like slowly drying up. But only God knows what was the reason for this stock, which is not having anything at all. They're completely out of the business, moving in from almost like 3 rupees to like 300 rupees. Only God knows what's happening with this company and the stock. And yesterday, the like what to say, they have given like close to 10% to the government in terms of like not able to meet their like obligations to pay their dues and other things. Now the stock will be on a down circuit, but trust me, these are stocks which is like completely like an avoid. This used to be my favorite stock in 2008-9. So something which I traded. If you would have looked at this particular stock for like what to say, all data, I'll show you. I used to trade in like 40-50 rupees. It went once to 500 for 600 odd range. It came into this level. This was the time wherein I would have got brutally like butchered due to that like an auction issue and other things. Again, it went to 110. From there, it never saw its lifetime high of like 450. Similar thing which is going to be happening for a few stock which is seeing all-time highs. Not every stock which is performing in the last bull run is going to be like performing in the next bull run. So currently this one is trading at 390 and its promoters are in the jail. So be careful. Okay, so this is, I thought like I needed to address with all of you. Now you know why our session is only purely based on like an index options and index future. There are plenty of things which is going to be happening in stock options. Avoid it. If you are a cash segment player, then yes, it makes sense for you to buy a stock, and then like even there you needed to like see the quality of the stock, and then like the management, and then their guidance, and then their performance in the last 3-4 years, and then what is their projection for the next 3-4 years, and then go for it. But if you're thinking about just because it is available at 5 rupees and 10 rupees, I don't care about anything and buying it. The 5 rupees and 10 rupees, it can be 5 rupees and 10 rupees for the n number of years as well. So never ever go thinking that the stock is available at like a cheap, like a price. Always go for valuation and a cheap valuation, and make sure that good companies are bought even if you're buying it, so that even you don't regret holding it for a longer duration. Imagine like the only stock which is there currently in my portfolio is like an ITC. I will not regret even if it doesn't move for the next 20 years, because they have so much of what to say market cap, and they also have the assets, and one day or the other they will definitely like and perform. But yes, for people who doesn't like the stock moving, you will be not be enjoying it. Okay, but because we have been so used to seeing the market moving like in an intraday, like in 50%, 100%, 200% on Bank Nifty, right? So when a particular stock is not moving, then you will be getting disappointed. That's exactly happens with many traders. So with that said, it's a brief introduction about what you can expect it from the options market and FNO. Okay, talking about that, we will be going in detail to understand why it makes sense for us to look at only certain components and not look at all the components. Luckily for us, at least we have few instruments to trade without any much of an issue. Okay, in the last 2 years there have been like a lot of regulations, a lot of rules which has been coming in from SEBI in terms of like in doing this, the margin like in a margin getting reduced for the sellers, and then like an option buyers getting like in butchered due to the stock market, like in a stock option rules and other things. But have you ever seen me complaining on any of these things in the last 2 years? Hmm? Have I like vented out my frustration anywhere saying that no, what they are doing is wrong and other things? Earlier, I used to do it. Okay. Earlier, I used to do it when it was between 2010 to 14 and other things. Why? I thought like, and these guys are completely against the retailers and other things. Yes, they don't want any retailer to lose large capital. They just wanted you to refrain from doing certain things, which is going to be highly risky and it's not going to give you consistent return. That's a main intention. Some of these rules have been framed. But we may think that no, these guys are like completely against us and they just doesn't want us to be there in the business. They wanted everybody to be there in the business. Otherwise, they can't make money. Only thing that they are trying to do is they are trying to give a freedom to you to tell you, guys, these are risky areas, don't go and touch it. And they are, how can they do it? Only when they do like in so many what to say policy and regulation, they may not be like, and then we will be like not able to touch it at all. That's exactly that they are doing it. The reason why I'm not complaining is I'm not going and touching any of those areas where these guys are like playing it. I'm just using the other areas where I know, okay, you guys are doing this. There are other areas which you have given it to us, and I will use that area for my advantage and make it count and be there in the market. Not necessary, whatever the things which we are doing, it is going to be there tomorrow. Even here, we might be able to see some restrictions coming in. We needed to adapt. Constant thing which is going to be happening in the market is you all needed to learn to adapt in the market rather than complaining. If you're going to be keep complaining, no one can help you. Okay, that's the game, and you needed to understand that. Okay, so a quick brief. How many of you now today took some morning trades? In the morning, you guys have taken a trade. Some of you would have taken a trade overnight, and then like, how many of you made 1% today? People who are like in some of the new people who have not taken a trade, absolutely fine. But people who have taken a trade and made 1% or like and made a loss, I want you guys to lock that percentage of profits. If you have lost it, it's well and good as long as it is within your like an what to say reach of 1 to 3%. That's absolutely fine. But if you have made a profit, please lock that profit. No more trades for you. Give me that. As I told you, give me your 20 days and stick to that discipline. That's very, very important because there was not much of trading opportunities in the morning except the opening trade. I don't see much of like in trading opportunities. Okay. So like in people who are asking me for my opening trade, this is my opening trade. And like an I have stopped it. There is not going to be like an any more trade unless and until there is a serious opportunity coming in. So what was my opening trade? I went on the call side, as I mentioned to you in the like in a morning message, and it was in the same range. The range I was expecting is somewhere around like in 380 to 400 on 38,400, but it opened somewhere around like in 470. I bought it. I was looking to buy up to like in 400 odd range, and it was playing in that range. I bought it around like in 100 and 200 like in lots or something. Started to again trail it once it went to 440 odd levels. These initial position I squared off some because it was like in the opening minutes. I took my trade between 915 and 917. Always the morning trade. How do we like determine the morning range? Because like I have made it simple for you. If you'd have seen the morning range which was given in the morning trade, the 38,400, we are calculated based on some of the things, and it was like in between 335 to 435. But I was giving a little bit of a privilege because it was in like in a bullish market and I'm ready to accept some risk. And that's the reason I went up to like an even in the opening minutes, I'm ready to buy it at 470. So this was the range which was playing in my mind, and I was playing absolutely in that. That's the reason if you'd have seen it, some of the quantities, I would have immediately squared it off and then kept the remaining ones trailing it once it was in my profit. But yes, the market didn't move the way I wanted it to move, because initially I was expecting a couple of large green bars, because RSI was already at like an 80. It didn't give me the move. So we made around like an 25K on this one. And then again, as I told you, once I closed my trade in one system, move on to the next one, made another a trade here. Again, it's a buy on dips. 950, bought some quantities, kept on hold, and again gave it up at I bought like in 38,400 and 38,500, 2 strikes, gave up something, and then in a final trade which came in at around this one, these 2 trades, bought somewhere around 500, closed it at 558. A quick how many minutes? 1 minute. This one is 2 minutes. This one is 3 minutes. The most important thing about the morning traders, as I told you, you needed to be ready to quickly get in and get out. That's very, very important. If you are not sure, if you're not sure about an entering and exiting, then you should not even enter. Okay, morning trades are there are say for example, there are no levels for you to take a morning trade. Why? Morning trades, usually it is going to be based on the previous day action and whatever the news which has come in the morning, and they are going to be taking a trade. In this scenario, you needed to prepare yourself. Okay, this is the level I'm going to be buying. This is the maximum loss I can incur to take. And once I'm done with that, then I'm going to be exiting that trade. And then the third one, this is another one which I took it between 920 to 930. Again, the same scenario, played small quantities in multiple trades. By 950, I've completely down and completely done with the trades, almost literally achieved my 1%. That's it. Okay, so how did we and we're sure about the morning trade since the an open and high? Because the concept is very clear. The Q1 and Q2 parameters are already met, and moreover, it is all some of the people who would have went home with the puts and nothing, they have to be covering their position, and that's a reason we went with an aggressive an attitude. And moreover, with whatever the things which has been happening in the bank nifty and the way the the Fed chairman spoke yesterday, in spite of that the Dow rallied, it is all a bullish sign. The dollar dollar index falling, all these are going to be important. Okay, don't worry guys, we will be learning about what is Q1, Q2 parameters, how you needed to look at the morning trade and nothing. The main reason why I wanted to share that, whatever the things which I told you on that particular day, the day one training, those are the things which I'm doing it. I want you guys to follow that with discipline. That's exactly I would expect from each and every individual who are attending the session. Okay, so never, guys, the morning trade will be taken only after 9:15 once the market opens. You cannot be taking it before that. As of now, there are no trades at all. I will let you know in case if there is going to be any trading opportunity for the day. If at all, we will look at that as well. But currently, we will focus on the session, because today's session is going to be very, very vital and very key. Why it is going to be a key? You guys needed to understand why Shiva did all this and why Shiva finally came to a conclusion that option buying makes sense for him, and why is he sticking with only one set of instrument, and why is he trading only here? You guys needed to know that, right? How did I came into the market, and what are the things made me to be become a trader like this? The first and foremost thing, when I came into the market in 2007-8, the first and foremost thing my friend told me is, Shiva, when you're coming into the market in the morning, the first thing which you needed to see is the world markets. When you're talking about the world markets, what are the instruments which you needed to be seeing? The first and foremost is going to be the Dow. That is what is going to be our first dot. I'm going to be talking about connect the dots, how to become a successful scalper. This can be used for both buying and also for selling. The first dot which we are going to be seeing is the Dow futures. When I say the Dow futures, where is the data is going to be available? You can either get it in investing.com or you can get it in the Bloomberg page. Bloomberg is from the US markets. So you will be able to see not only the US markets, you will be able to see the world markets. Earlier days, this is my first website, which I used to track it beginning of the day. Okay, so if I wanted to know about the world markets, those days, I don't think the investing.com was there. So I used to only go here and then like and look for all the things which is happening around the world, all the news. Those days like and Bloomberg was absolutely free. Now it is like on a chargeable basis. So now I don't use of them much. But in the morning, as you guys are looking at the SGX Nifty, I used to click on the stock futures options in the morning. Okay, so this is going to be the area, and then the index futures and how the American markets closed yesterday, another thing. So now, why it is important for us to be tracking the world markets, and what is the necessity for us to do it? One of the things which is happening in the last 50, 60 years is all the markets are interconnected. When I say interconnected, we are doing a lot of like an import and export. So it is happening across the world, across the region. But who's the number one economy? The number one economy is the US markets. Yes, there are like in Japanese, the like in the Chinese, and then the like in what to say, the Britain, the Germany, the France. All these are like in coming in the second, third, fourth, fifth category. And India is slowly catching up, and it is due to its size. We are like, and we can proudly say that we are the fifth or the sixth largest economy in the world now. But who's the number one? It is always going to be US at this juncture. Maybe 10 years, 20 years down the line, China can overtake. Who knows? It may like can happen well before or well after. No one knows. And if at all, if it happens, then even like, and we might be looking at Dow as one of the features. The reason is all the major transaction which happens in the world when it is like in talking about like in gold or like in a BTC or like in thinking about crude or everything, it has always been told in the dollar terms. Why dollar terms? Because that guy is the number one economy, and we all deal it with the dollar. So even when you're saying like in the crude, you'll be saying like in our like in crude export like an import bill is going to be higher based on what? The dollars, right? So that's the reason dollar holds a maximum value, and all the economies around the world, they all been like in trying to do a dollar denominated transaction. In some time, like, and you would have seen like in Chinese, like in getting into that, no, whenever we are buying something from Iran, we will be doing yuan, okay, their currency. But like in still yuan as in currency, it has not been widely accepted across the globe. Okay, dollar, yes, everybody would be accepting it. Any nook and corner of the world, if you're carrying a dollar and if you wanted to convert it, you will be happily be able to convert it. But if you're using the same thing with like in yuan, I don't think that is going to be possible at this current juncture. And many of us doesn't believe the way the Chinese are doing it. And none of the markets do. China, yes, that is like in one close guarded economy where even like in a big, like in a, what to say, people will not be like in able to get a clue what these guys are planning to do the next. Okay, so sometimes when they see that they're like an what to say, the currency is getting like an depreciating, they immediately come with like an deregulation and everything. All those things happen with the Chinese economy. So never like an underestimate or like an overestimate the Chinese guys. But talking about the Dow was nothing but the US markets. So why did my friend said like I'm about to track this? He told me, this is the only thing which he told me. Shiva, whatever the US market does the previous night, we can expect some kind of a move happening based on that in our market. If US market close positive, we can also expect positive markets today. If US markets close negative, we can expect our markets to be negative. He didn't tell me anything other than this. He was only telling, if this one positive, our market will be positive. If this one is negative, our market will be negative. And he also told me the US futures is going to be trading 24/7, like, and we needed to track it through the day. At that time, I didn't believe him. But there are certain days wherein I have seen and observed the way the US market has given the results and how it has been doing it. Then over a period of time, then you will do your own research, right? Then that's how I got into like an all these information, how the every market is considering Dow as an important feature. Why they needed to consider? Because all the transaction which is happening, 80 to 90% of the transaction which is happening, it is all dollar denominated transactions across the world. Okay. Now, talking about the Dow futures, how I needed to track it. What you're witnessing now here is the live tick, right? The Dow futures showing you like in 58 points, 36,312 is the live traded. Unlike our SGX Nifty, this Dow Jones future is traded through the day, through the week. When I say through the week, it starts at 5:30 in the morning when the Nikkei market opens and then shuts shop at 1:30 or 2:30 US time based on the daylight saving time. Again, I repeat, it opens at 5:30 in the morning and then shut shop at 1:30 or 2:30. That then it was almost like an traded for 20 hours in a day, right? So Monday to Friday, this timing, you will be able to see the Dow rates available to you. Okay, so what is this Dow is going to be giving me a clue? Now, the Dow is trading at 54 points. Why it is trading even during their like an off market hours? Why I say off market hours? Now currently in US, it is currently night. We are 10 hours and like in 10 hours 30 minutes ahead. 10 hours or like in 11 hours based on the east zone or west zone or like in central time zone or whatever the time zone which US is in. We are like an ahead. So in this scenario, currently this is the rate at which it is trading now. So what is it giving you a clue? The Dow, which is trading at 58 points positive, if they are opening the shop today, when they will be opening 8 or 8:30 their time, which is going to be around like in 6:30 or 7 in our time, local time, when they are opening, you can expect a 59 to 60 point gap up opening from yesterday's close. What was yesterday's close? Yesterday's close, you can look at it in the major indices column here. So this is what is going to be showing you the yesterday's close. The Dow has closed 183 points, which is the last traded rate was 36,252. Now, what is the current future rate is trading? 36,310. That means you are getting a 60-point gap up, which can be expected when the market opens. So the first clue, what did the market close yesterday? How did the US market close yesterday? The US market closed 180 points positive. These three are from the US market, Dow, S&P, and the NASDAQ. You have like plenty of other ones, small cap and other things. We don't track that. We'll be tracking only the Dow. Dow is similar to our Nifty 50. S&P 50 will like an S&P 500 is like a complete Standard and Poor compilation of the 500 companies which they've given a weightage. NASDAQ is the tech listed one, and it has closed 1.41%. You can consider NASDAQ is similar to our IT, like a Nifty IT. This one is our Nifty 50. So now you know this is like all the markets have closed like in deep positive yesterday after the Fed chairman's comment, which he was like presenting it before the Senate. Okay, what everybody were expecting? Fed chairman to be hawkish and then like more and more rate hikes. Yes, he delivered all of the things what the market wanted it. He told exactly the same thing, but still the market rallied. Why the market rallied? Because they know already this is what it is, and moreover the liquidity is already available. Yes, this market is absolutely run by liquidity. So no matter whatever others are doing it, as long as the liquidity is not drying up, the market is going to be keep running like this for crazy. Okay, the amount of money that is being pumped in, the amount of printing that is being pumped in, with the inflation skyrocketing almost to 30 or 40 years high in all the European and the US economy, still the market is not worried about the rate hikes. When the rate hike happening, not automatically the funds will be getting squeezed. The amount of money at which you wanted to borrow is going to go higher, and people will be tending to spend less. All those things are going to be happening, but they are not worried about it today. If at all, if it happened, let it happen. I will see it on that day. That's the way the market is running. So the first clue what you're getting is Dow has closed positive last night. If you look at it, it has closed at 2:30 last night, and it was all closed in the positive territory. Okay, now you got a bigger clue that the Dow has closed positive. So what you can expect today? All the Asian and the like in the Indian markets and other like in the market which is going to be looking for the Dow clue, it is going to be positive. Now, what is the Dow futures is doing? 180 points last night, plus the Dow futures in the morning, it was in a flat territory. Now, slowly during intraday, the Dow is heading up towards like in 55, 60 points. So 180 plus 50, that means 230 points. So our market is feeling the confident that yes, these guys have rallied yesterday, and today also the Dow futures is expected to open in the green. Today I can expect the Dow futures, Dow market in the evening to open in the green territory, so I can rally because I have the global market support. Dow is like mother of all markets. Imagine in your place, in your home, you will have plenty of family members, but whom you will always go to, either the father or the mother. You will always look for father or the mother. The reason is they will be showing you the sentiment and the mood of the entire house. If mom is sad, you know the entire house is going to be sad. If the mom is happy, you know the entire house is going to be cheerful. That is the reason I want you guys to track this guy more than anyone. The Dow is going to be telling you whatever the things which is happening around the world, he is going to be absorbing it. he or she is going to absorbing it and then showcase it in his price. When things are going in India or in any major economies, imagine there is a big default happening in Germany, or there is a big default happening in China, or there is a big default happening in Hong Kong, or like in any major economies, Japan. You will see the Dow rates reacting to that. Why? Because Dow is directly interlinked with all the global markets. The transaction is going to be based on that. There is going to be plenty of import and export. Everything is going to be happening. So the Dow will absorb all of this. Whenever you're seeing like in Chinese, like in even like in last month, when the Evergrande issue was happening, okay, there was like in a talk of a default, and default did happen. But when there was an initial talk of a default and other things, the Chinese market crashed, the Hong Kong market crashed, and immediately the Dow futures would have crashed 300, 400 points. Once the Dow futures crashed, what happened? There was an like an reverberations happening across the world, and even our markets were falling on the day. Though there was no direct connect between India and China on the Evergrande issue, just because the Dow futures crashed, our market crashed 300, 400 points in 5 minutes. Somewhere like we were 150 points positive, we went into 150 points negative. Why did that happen? It happened because your mother was not happy. Mother was happy in the morning. All of a sudden, mother became sad, and because there was a relative, and probably there was a tragic news in one of the relatives' family, and the news came in, the Dow reacted, and you have to react. Even though you were not sad, just because of seeing your mother being sad, you also were sad and somber on that particular day. That is what is going to be happening to our markets. So there will be days wherein our markets will not be listening to Dow, similar to what is going to be happening in the next 1 month or so. What is that period? During the budget or during the election, our markets will not be listening much of in global cues. We have our own domestic cues to handle. When I say that, imagine when you are stepping out of your house. Okay, you're not going to be thinking about your mom or anyone. What you will be thinking when you're going into in college? Imagine today you will have in college culturals. Your mood will be based on whatever the things which is happening in the college culturals. If you win, or if you participate in a contest and if you win, you will be very happy. If you lose to someone who's going to be your biggest enemy, what you will do? You will be so sad. Though you your mother and everybody will be at home, will be happy. You being at the college culturals, you will be reacting based on what is happening on that particular day. It's exactly going to be happening in the markets as well. You will not be seeing, when you have a lot of domestic cues which is going to be dominating, we will not be listening to global cues. So what is the key takeaway? A key takeaway, we needed to first look at Dow for the clues what is going to be happening. If the Dow is going to be positive, we can expect the positive rub-off to be happening in our markets too. And if the Dow is going to be negative, that rub-off can be shown in our markets too. If the negative or the positive rub-off is not seen, that means there is something which is happening in our markets which is keeping them away. Okay, so then you needed to focus on domestically on that particular day. Dow as a factor, you just keep it away. Got it? This is very, very important. We talked about the Dow. What are the other important markets which I will be tracking? I'll be tracking the DAX, CAC, and the FTSE, which is the European index, Germany, French, and then the UK. Usually these guys start to trade from in 12:30. That is in somewhere around 12:30 to 1:30 in the afternoon. That is when the European markets open. Okay, these three are in large economies in the European region. We will be tracking them. But even these guys, whatever the things which is happening here, Dow will absorb and then show it to you. There will be days wherein you will see in a big fall happening in DAX or in a FTSE or in French. Those are going to be in what to say, area specific. Imagine there is a default happening in Germany. There were a couple of years back, the Deutsche Bank was about to default. That was a big issue, and the Germany index alone was falling. Then Dow was also falling with that. Whereas other two European indices were moving higher. It is based on, even one member of the family is sad, mom will be sad. So you needed to look for mom first and then see why mom is sad. Who's that guy who's making mom sad? If you understand that, you will automatically understand where the pain is coming in from. Okay, so the DAX, CAC, and the FTSE, the European indices, which we will be tracking, the timings would be somewhere around 12:30 to 1:30, and then they close it somewhere around 9:30, 10:30 in the evening. Then Who else is going to be other important guys whom I will be tracking in the Asian region? One guy is going to be Nikkei, another one is Hang Seng, and then the Chinese markets. Only these three guys. Out of this, Nikkei, who's that? The Japanese index. What this guy will do? He will just replicate whatever the things which has happened overnight in US market, he will replicate. Imagine last night, the US market was closing at like 180 points or 1% up. Okay, think that. Like the Nasdaq went 2% up. What this guy is doing now? He is almost 2% up on the futures. What is currently indicating? He was so happy with what mom did, and he is very, very happy. And you can consider this guy is your elder brother. This is your another elder brother because these are all from your Asian region. But this guy is very close to mom. So whatever mom does, he will be listening to her. So whatever the US market does, the Nikkei will just replicate it and then he will take care of it. Next comes your big brother, which is nothing but your Hang Seng market. Hang Seng and India has a common vibe. What is that? Japan and US are all developed economies. Hang Seng and India, Hang Seng is nothing but your Hong Kong market. These are all emerging economies. When they say emerging economies, they are coming up, but still a lot of scope for growth and other things. That's the reason we have been considered as emerging economies. So if this guy, your elder brother, is too happy, then you can get a clue that you will also be happy today. What is this guy doing today? If you have seen in the morning, why my reason for me to be bullish is, one of the reason is the Hong Kong guy. He has been very happy for the past 2 days, and that has been shown across. And today he was extremely happy. If you look at the live rate, okay, this is the live rate. This guy is trading at 599 points, 600 points, almost 2.53. But he has been an underperformer for the last 2 years or so. He has been very underperforming. That's fine. But in the last 1 week or so, he has been slowly from 22,900 odd levels. He has come back to 24,300 odd levels. He has been so happy. And that's a good sign, which is going to be giving me positive, a lot of positive move in the morning, that I can expect it to be positive. So why I was a little positive today in the morning, this guy is also one of the reason. He is your biggest elder brother in the Asian region. This guy starts trading from 7 a.m. Between 7 a.m. and 9 a.m., he is going to be giving you the clue whether I'm going to be positive or negative. If this guy has already fallen based on whatever the things that has happened yesterday, if this guy would have fallen 300, 400 points, you would have seen our markets also getting weak if we needed to react to the global market cues. As of now, this guy is absolutely in a sky high. So this guy is going to be giving you all the vibes of being positive. Now, talking about the Asian region, our market is one of the in a few markets which opens at 9, but most of the Asian regions opens at 5:30, 6, 6:30, 7. By 7:30, you would have seen most of the Asian markets opening up in green. Nikkei, green. New Zealand and the an Australian index, green. Shanghai, green. Hang Seng, green. Taiwan, green. Taiwan is also an okay market. Kospi, green. Kospi is nothing but the Korea. Taiwan is a Taiwanese index. So all these guys are in green, but who's outperforming the Asian indices today? Hang Seng. Your big brother is performing absolutely beautiful. So which is all giving you the positive vibe. Any dip on this market is a buy for me. Okay, it is a buy for me. Okay, so why are we not considering the Singapore SGX Nifty? Guys, there are days wherein I used to be looking at the SGX Nifty. That used to be before 2016, I believe. Yes. Prior to that, yes, whatever the SGX Nifty shows, you will be getting the exact trading rate in the morning when our market opens. That particular time, there was a good coordination happening between the an NSE and the SGX and everything. But in the last few years, there has been you can consider there is a business feud or whatever it is. The NSE has not allowed certain elements, and the liquidity has come down a great extent on the SGX trades, the overnight trades, which is happening on very, very thin volumes. That's the reason I don't give any importance at all to the SGX. How many of you have seen in the last 2 years, or whenever you guys have been tracking, SGX would have shown 100 points negative, but our market would have closed opened in the positive territory. Yesterday, many of you were tracking the SGX Nifty, right? How many of you are tracking SGX Nifty yesterday? It was showing you 150 point gap down, correct? But did our market open gap down? And I was mentioning in the morning message, if you have read my morning message, I told you, don't be surprised if you see it in the Bank Nifty in the green, and it opened in the green. Am I not right? So don't ever compare SGX Nifty with like in the live traded rate. This is what you're going to be getting it. No, it is going to be based on the positioning of the players from the FNO market. Okay, so SGX Nifty, forget about bothering looking at it. It is doesn't make sense, and then I would not be doing it. Okay, so I wouldn't be giving too much of importance to SGX Nifty. I would be giving more importance to this Dow guy. I would be giving more importance to the Hang Seng guy, as and when these guys are opening in the morning. That is going to be giving me the biggest clue. Okay, so now you would have known why Dow futures is going to be an important element for you to track through the day. Now, next thing, imagine the Dow closed 200 points yesterday, positive. Today, the Dow futures, before our market opens by 9 a.m., it is showing you minus 200. What you can expect? Can you expect a positive or a negative opening? 180 points positive yesterday, 200 points negative in the morning. What you can expect? Negative. Why negative opening? The reason is, whatever the thing which has happened yesterday, it has been considered. What is going to be happening? That is what the Dow market is factoring in. The futures is factoring and telling you, okay, futures is factoring and telling you what is going to be possible scenario which is going to be happening today. Okay, if the future is showing you negative, I would give a lot more weightage to the current scenario than what has been closed yesterday. Okay, so that's very important. Don't just blindly go and think that yesterday the Dow closed positive, even though the Dow futures is trading at like 100 or 200 points in the negative, I'll still get a positive opening. No, always give maximum weightage to the current rate than the previous day rate. Now, one interesting observation which I want you to see it. If you have seen our like in dashboard, where is our dashboard? I'll show you that. In the dashboard, I've given you the Dow futures, I've given you the Nifty futures, I've given you the Bank Nifty, India VIX, and everything. Now the Dow is slowly moving higher and higher, but our markets, both the Bank Nifty and the Nifty, is moving lower. What are they trying to do? Are they listening to the Dow now? Are they listening to the Dow? No. They're just like in falling on from the high levels, but they're still positive. They're almost like in 0.75% positive. But what they are trying to do is they are managing the index in such a way that you are not going to be getting any reward at all today. Okay, what they're trying to do, they're just sending the weekends out. Why they needed to do it? Because if everything is going to be like in so easy and easy peasy, like in looking at all this data, if you're able to make money every day, then like in how they will be able to survive? Huh? So they needed to run the casino. They cannot be keep giving money to all the players at all the time. So they just needed to avoid people taking like a lot of money. Only the strong hands will be able to make money in the market, and that too, you needed to know when to hold, when not to hold. On a day like this, if there is going to be like a significant fall happening, okay. Now I will tell you a scenario. You guys tell me what you will do. The market is falling like 100 points now. Okay, currently it is 137 point Nifty, and like a Bank Nifty is 280 points positive. Imagine the Bank Nifty is falling 200 points and the Nifty is falling 100 points. But the Dow Jones is 65 points in the positive territory, and like in the global markets are on positive territory. Will you take like and try to take a put trade, or will you try to do one buy on dips market in this one? The overall texture has been like a completely buy everything. You will try to buy on dips. One thing which I want you guys to look at is, though it is a buy on dips market, I want you to look at other parameters as well. Don't blindly say, no, I will buy it. On a daily time frame, if you'd have seen it, we have been like in a non-stop rally for almost like in since 30th December. From almost a level of 34,600, we have gone to almost 39,000, almost like in a 4,000, 5,000 point. And every day it has been like in a green bar every day, including this one. Don't look at like and thinking that it is a red bar. It was like a big hammer getting like formed, but like in that particular day, the adjusted closing was showing you red, but it was a complete buy. Why? From look at the long wick from the lower level, it has been like steadily climbing, and literally they closed it at the day's high. Okay, one more thing. Look at the RSI factor. RSI is extremely overbought, And it has been very, very odd for an index who has been like an continuously, trading and then like an being there in this region for a long time. And that too, almost a 9 or 10 consecutive days of green. Very rarely you will be seeing it. After 3-4 days of green, you will see like an one red day, and then like again a green day, another thing. This is like a very rare phenomenon. And sometimes some of the guys who would have bought it at lower level, they wanted to book their profits. And that's a reason they thought, when everybody is going to be bullish, let me take some advantage out of that and let me book some profits. So guys, keep remembering, all these things are the ones which I want you guys to think about it. Okay, so never think always everything is going to be like in your favor. Sometimes you needed to look at other parameters as well, why they have been rallying and how many days they have been rallying, why there is going to be like a little bit of a caution is required. You needed to look at all those aspects. Coming back here, the Dow Jones, as of now, which is giving me a very, very positive vibe. In case if there is going to be a big fall, I will use that opportunity to buy. One more thing. Imagine the Dow is currently trading at 70 points positive. All of a sudden, if you see the Dow moving from 70 points positive to almost 100 or 200 points negative, do you want it to still be there in the buy on dips market? Your mom has become sad. Now the Dow guy from 50 has gone to 80. When your mom becomes sad, will you want it to be like no? Then you needed to change the direction. That's the reason you needed to be tracking this guy through the day. If the Dow moves 100 points quickly in a single like in a single candle, you will see that kind of a spike happening in our markets too. So you needed to be watching this Dow guy through the day. That's the reason we have given you the Dow live rate here. Okay, this guy is going to be showing up all the live rates from 79. If this guy moves higher, you will see that our market like in Nifty moving higher. This guy is not directly correlated with any of these guys. You will be seeing a major index happening in the Nifty, and the Bank Nifty will be like in a supporting cast. Okay, so Bank Nifty will be a supporting cast. The biggest guy who will be like in getting benefited is going to be the Nifty 50. There are days wherein the Nifty will react based on this, but the Bank Nifty will not react. So always go correlate with the Dow, with the Nifty. Don't correlate directly with the Bank Nifty. There is a Bank Nifty and the Dow theory, which I will come to you later. I'll tell you like, and there are like things which will be happening in the market, which I will also explain it to you, which will be helpful when you see it in the future. Okay, so now you know why we needed to be tracking the Dow through the day, and most importantly, how you needed to correlate it with the world markets. So does it make sense now? How many of you feeling that? Have you ever like seen this Dow theory like playing out the way it has been done? Have you ever wondered like why our markets have been reacting or why our markets have been falling? Sometimes you would have been wondering, right? All of a sudden our markets are being crashing. There is no news at all. Why? It's all purely based on this guy and then what's happening around the world. So always remember, not only your mom, even your family members and your elder brother, everybody needed to be happy if you wanted to be happy. Because we can't be like happy when our whole home is like sick and down and out, right? We will be feeling that pressure. We will also be feeling sad. We'll also be down. That's exactly happening here. So how many of you are listening or like knowing this Dow for the first time? I never tracked Dow at all in my past trades. How many of you have not tracked it at all? Wow. Plenty. So you guys have got a new perspective today on why we needed to be looking at our first dot, which is Dow. Guys, people who joined late, go through the video tonight. You will be able to understand why you needed to be tracking the Dow. So now we have looked at our first dot, which is our Dow 30 futures. So I'm just going to be asking you a small query just to make sure that how you understood it. Okay. So the Dow is now trading at 80 points. All of a sudden, the Dow goes to flat territory of 0. What you can expect on our markets? Our markets is at the all-time high. Like the day's high. You can also expect a fall happening. But in rare side, the Dow is at 82, and our from 82 it has gone to 0, but our market is not falling. Okay, but the Dow again from 0, it has rallied to 100 points. What you can expect on our markets? Again, I repeat, Dow from 80 it has gone to 0. Our market didn't react; it is staying at the top itself. But Dow has again rallied from 0 to 100. What can be expected? We can expect a strong upside momentum. Why? When your mother is not happy and she has fallen sick, still if you are being content with what you're doing, because you are thinking mother will be somehow be happy and she will come back, so let me not fall, let me not get into somber mode. But when mother is happy, then you are going to be double happy, right? That's when you will see a bigger rally happening. Guys, whenever you see our markets not reacting to Dow, either on the upside or on the downside based on the Dow future rate, you can expect something happening in our market in the direction where they are going to be. Imagine there is a fall happening today and we are already falling. Dow is recovering, but our market is not recovering. What can happen? If the Dow falls again, our fall will be much more stronger than anyone else. Always keep remembering it. When these guys are moving, we also needed to move. When they are falling, we also needed to fall. If we are not falling, then we are strong. The same thing, the markets are falling and recovering. Our markets is not able to recover. Then when the fall again starts, our market will be falling like crazy compared to the other markets. So now the Dow has moved from 57 to 80 points. What has happened to our markets now? Can you see it? What about the Nifty and the Bank Nifty doing? It went lower a bit, and then they are not at the day's high. Almost they are at the day's high. Are they listening to the Dow guy? They will. Okay, so you needed to be thinking on those lines. I have given you the first and easiest clue. Okay, I have given you the first and the easiest clue how you needed to be tracking it. If you are able to follow this, there are days I would have traded only based on the Dow alone. How? Imagine now our market is 150 points. This guy is almost 320 points. If this Dow guy moves another 100 points because he is going to be the first one who's going to be moving, right? If this guy moves 100, 200 points quickly in the next 2-3 minutes, you will see the move happening in our markets. What I will do is I will immediately go and take a trade on the Bank Nifty or the Nifty. All I need is just 1 or 2 minutes for me to get that move. Immediately you will get a 30, 40, 50 point move, then get out of the trade. That's it. Day is done. Even with this, you will be able to see a big trade. You can get it. Okay, so tracking the Dow through the day, it's very, very, very vital. So I hope the first dot on how to connect the dots has helped you a lot. With that, we will take a 10-minute break because I wanted you guys to process your mind. So imagine what are the things which we discussed today, how the Dow helps, how the Dow looks like, and we look at the Dow data previous day and then the live rate which is happening in the futures market, and what are the global markets which we track along with that, the DAX, CAC and the FTSE in the European region, the Hang Seng, the China and the Japanese index in the Asian region. The Japanese index opens at 5:30 in the morning. He's going to be the first big brother who's going to be giving you the clue. But the most important brother for you who will open at 7 a.m. is going to be Hang Seng market. That market is also going to be giving you a clue on how the global markets can react. Today, Hang Seng is almost 2% up. So I'm expecting a lot more bullishness to be there. Look at this guy. He's almost trading at 600, 625 points. This guy is closer somewhere around 1231. Watch out this guy, whether he's closing it at the day's high or he's doing a profit booking from the day's high. Imagine from 600, if this guy comes and closed at around 300 points, then you can expect some kind of a late reaction happening in our markets as well. Why? There would have been something which has been happening, and that guy has been like in closing it at the day, like in almost giving up 50% of the gains. You can expect similar kind of a scenario playing it out markets. One more thing, this is only one theory. Don't just blindly go by only Dow element. Many people think Shiva has told me about the Dow. Now I will only take trades based on the Dow. No. Guys, the reason for me to connect all these dots is earlier I used to take trades based on one or two elements. Then I have won sometimes, I've lost sometimes as well. That's the reason I started to connect several things which is there in the market, and my results have gone up significantly. When only tracking Dow, my success rate would have been 50-60. When I started to connect all these guys together, my success rate has gone to 90, 95, 100% also. So that's the reason we are going to be focusing on all these elements rather than just looking at one particular element. Okay, so let's look at the other elements as well. Yes, there is no fixed percentage of like how much percentage I will be giving it as like what is it, Dow. There are days wherein the Dow would not even like Dow would do certain things and we will be like doing certain things. And I would sincerely say, just don't give up like a percentage weightage and other things. We will be like taking it on like what are the things which is happening on that particular day. And by 10:30, 11, you will get a clue whether our market is listening to the Dow or not. Okay, by 11 o'clock itself you will get a clue, because the Dow would have gone higher and what to say, our markets would be moving in a different direction. Guys, don't worry. Once I complete all this, I will show you how it can give you a clue in terms of our scalping needs. That's a pure reason I have developed this one feature called connecting dots. Okay, this feature what we have built here will be including all the things which you are going to be seeing to give us a clue how the Dow is going to be giving me the clue. If you look at this, how the Dow is giving me a clue and what are the things which I needed to be watching, everything is being given here. So from morning, what is the trend? What is the majority trend which you're seeing? Bearish or bullish mostly? We will be connecting all these dots. Don't worry. Once you get a clue, you will be able to use it for 3-minute and 5-minute, whether you want it to be bullish or bearish. On a 5-minute time frame, from 11:20, it has been completely bullish. So we will connect all these things. Once we complete this PPT, maybe in a day or two, we will complete. Then you will understand that. So with that, we will take a quick 10-minute break and then we will be back. I hope all of you would have understood the importance of this now. The Dow, guys, always put a characters to the story. Okay, don't think like even in a school days or college days, we don't like the physics because we are not able to connect it with our story. That's the reason I'm giving you all these stories with the characters, so that you will be able to easily correlate in future. When you're thinking about Dow, you'll be thinking about your mom. You'll be able to connect it a lot more easy. Okay, so we will like work on these kind of like in stories so that it'll be easy for you to understand. Okay, we'll be back at 11:55, guys. Take a small break, come with a clear mind, because next is going to be an important topic again. Okay, so I want you guys to absorb as much as possible. How many of you are feeling this is heavy, guys? Am I going at the right pace? Great, great, great. Okay. So team, we are back. Okay, so there was a question which was like, okay, what happens in case if the Hang Seng markets open negative and then like goes to positive by the time our market opens? Absolutely, yes, our market will open in positive. So what is that which has happened in the last few minutes? I'll just show you the dashboard. What is happening with the like in Dow and our markets now? Last 5 minutes. Do you see a pattern? This is Dow. This is our market. Is it replicating the Dow? Are they showing you a live example of how it is going to be done? So now is it making sense for us to just like and see what is happening in the global markets or not? So how many of you believe this Shiva is the operator and he is doing that? It's not me who's been doing that. It is the way it has to be happening. Okay, so this is like a story which has been like an happening for a while, and you needed to just see how it has been done. The only thing which I want you guys to focus is now you know on the dashboard why we have created these two. Okay, so it'll make a lot more sense for you what is happening in the world markets and how it is getting done in our markets and other things. Now imagine the Dow is falling and our markets is not falling further. What can be the reason? That means our market has some internal elements which is trying to be bullish. Even this small 5-10 points and don't even bother about that. Guys, this is real time. You're seeing the real time rates as it is happening. Okay, so this is like in a real time which is happening, and this is what you will be getting to see. If there is a 5-10 point fall from like in 70 to 60, don't expect like an almost like in a drastic one. Okay, there's like don't expect it to be a drastic one. You can expect a minor one, but if there is going to be like, and this is on 5-minute time frame, right? If there is like in a consecutive like in 2 3 15-minute time frame wherein you're getting to see continuous fall, then yes, we will have a bigger impact. That's when you needed to be really careful. For all these minor ones, yes, there will be some move here and there, but there will be like in one or the other index which is going to be helping them to take the market higher. Those things is going to be happening, but you will be getting a major clue where these guys are going and what they are planning to do and how they are planning to do. Everything will be available. Guys, in case if you are not able to view this page, remove the ad blocker in OI Pulse, then you will be able to see the page. Some of you are getting a blank page on the dashboard. That means you have like added an ad blocker. Remove that ad blocker, you will be able to see it. Guys, everything is a real-time rate here. Okay, only thing is if you're watching the Dow futures here on this page, which is the, I believe this is from the US portal, you'll be able to see it from the live rates. And in case if you're seeing it from the Indian portal, sometimes you might be getting a delayed rates. Okay, so always see from the US portal, you will be able to see the live rates. And what we have done here is in the trading view, we have given the live ticker for you. Okay, someone who is not able to get it, like, and you can use our like in trading view. Currently, like in advanced chat, we are not able to load it because like in what to say, these guys are not allowing us on the free version. So use option scalping V2 as an indicator. You will be able to get this table along with the live rates if you are using a paid subscription of TradingView. If it is a free subscription, you will get a delayed rate. If it is a paid subscription, you will get the live rate as well. Okay, many people have been asking me, Shiva, like, and why there was no signal from yesterday on OSPL? The reason is plain and simple. The last signal came somewhere around like a day before yesterday. Unfortunately, there is not much which is interesting happening in the market yesterday. That's the reason there is no signal. Though the market is moving higher or lower, it is still not giving the confidence for the people to give like a good signal. So that means clearly a day to avoid. Okay, so it is not meeting certain parameters and we needed to avoid it. Yes, this is in trading view. What you're witnessing is in trading view. Okay, so now we have seen the Dow futures, how it helps you to do the trading and other things. Even during when you are tracking the Dow futures, yes, there are other elements which I will be tracking along with that. What are those elements? Before I move on to the India VIX story, I will be like in telling you what are the other elements which I will be tracking, which is going to be very important. I told you this is the key guy. Based on that, the Nifty and the Bank Nifty will be moving. And the key Asian indices which I'll be tracking through the day is going to be this guy. Even Hang Seng, which has gone to 660, 700 points, it has cooled off a bit from the higher level. So that's the reason I told you when they are closing, where exactly they are closing, please keep a track of it. Now, this is done. India VIX is the next one, which we will be tracking. And on the dashboard page, apart from these two, I've also given you India VIX, Bank Nifty futures. I've given you crude oil and USD INR. So what is the reason for me to add these two along with this? The USD INR, and like, and I told you about the, like, and all the transactions are like in dollar denominated, and that most of the transactions are happening in the dollar terms, right? And India as a country, we import our crude, we import our gold, everything in dollar, correct? Our import will go up based on the imports which we do. Say, for example, whenever the crude prices keep going higher and higher, our crude import bill is going to be going higher and higher. Why? Because we needed to purchase more and more crude for our consumption. When the crude prices keep going higher and higher, naturally the price of petrol and diesel in India is going to be going higher. What is going to be happening indirectly? It will stoke inflation. Why? Because the cost of carrying goods is going to be higher. You will see the freight and the levy, like, and the charges of like in carrying the cost of goods is going to be higher. Naturally, you will tend to sell the products at a higher price, and the inflation is going to be shooting up. So if the import is going to be more and more, you need more dollars to buy it. If you need more dollars, automatically the rupee will depreciate and the dollar will appreciate against our currency. That's the reason we have given an option for you to track crude and USD INR. There are days wherein the Dow would be reacting positively, but our markets would not be reacting much. Today, the Hang Seng market has rallied 200 like in 2%, but our markets is just like in moving around 0.75 to 0.8%. Why is that? Why is that? We have been sitting on like in a large rally. That is one. Okay. We have been sitting on a large rally. That is one. But still, we are not outperforming the world compared to other markets. Why is that? One major factor is the crude. What the crude has done in the last few days is, if you have seen the crude chart, I'll just open up the crude chart. If you have seen the crude chart in the last 1 month or so, it went to a close to like in $60 to $70. Now we are in the verge of like in breaking 83. It is almost at like in a 3-month or 4-month high now. Correct. If we cross this 86, 87, we might cross it like in a 3-month high. And in case if we are crossing this like in a $90 or something, then we might just like and go all the way. Okay. So as the crude prices keep going higher and higher, naturally what's going to be happening? Our crude import bill is going to be going higher. Automatically, the rupee will depreciate and the bond yields will go up. If the bond yields go up, the interest rates expected to be going up. The RBI will raise the interest rate. So you will have a domino effect, which is going to be happening. That's the reason some of the people who are looking at the Bank Nifty, they will be thinking that, oh no, man, our market is going to be like an we are in a dicey situation. Though the global markets and others are going to be rallying, the crude increase is going to be like a disadvantage for a country like India. So if the crude is going to be increasing, then you will see the USD INR also like in depreciating from yesterday's level of 73, 72. Now we are at almost 74 odd zone. And then you can expect the bond yields to be going up. If the bond yield, 10-year bond yield goes up, it will automatically feel the pressure. The RBI needed to increase the policy rate. Currently, the repo rate and other things are sub under 4. So they have no other choice other than to increase the rates. So that's the reason sometimes tracking the crude, the Brent, and then the like an USD INR is also going to be equally important. Yesterday, the crude has rallied close to 3%. So it is very important not only to track that guy, to also track this guy. Yes. Let me give you a brief story about the crude and then the USD INR and how usually like can predict it. Whenever usually in the last 3-4 years, if you'd have seen, the crude was hovering around between 40 to 60. Sometimes it went into the negative. That was like a big plus for the country like India. But after going into the negative territory, it almost came into the positive territory, and then now it is trading somewhere around in 50 to 60. Anything in the region of 50 to 60, we are always going to be absorbing it, because that is in the long-term averages which has been playing out. But whenever it has crosses that 60, 65, 70, 75, 80, it is going to be putting up a lot of pressure on our country's finances. That is the reason going forward, if the crude is going to be increasing from here, already we have seen the 80, 85. As long as it's 85 is holding up, still we will have some kind of a cushion, because in the last 6 months or so, we have already seen it. The market knows it. Okay, this is the level I have already seen it. Show me something new. If it crosses the 85, $90, then yes, the real pressure is going to be coming up. Then you will see a lot of underperformance from a country like India. Get ready to see that. Okay, you can clearly see, because of the crude impact, the rupee is already been depreciating from the morning. So indirectly, whenever the rupee depreciates, crude increases, on that particular day, you can expect some kind of an underperformance from the bank Nifty. Why? They will start correlating it with thinking that the bank interest rates are going to be going up, and those are not going to be a good news for the people who wanted to take loans and other things. Then automatically the amount of cost of money is going to go up. Many people will not be liking to go and take a loan or service the loan and so on. Then one more thing, whenever the rupee depreciates, or the USD INR USD gains strength, you will see the IT sector performing better. Why? Because these guys are going to be exporting, and the amount of money that they are going to be getting it is going to be in dollars. So they will be getting it at a better price. 90% they would have hedged it. But imagine in the long run, imagine if the rupee is going from 72 to 80, then imagine if you're billing a company for $1 million, you have another 10-20% increase in your revenue that can automatically show up in your profits. That's the reason whenever the rupee depreciates, you will see the IT companies performing better, the banks performing little poor compared to the IT company. So this is a correlation which will be happening. So in the last 2-3 years, IT has performed very well compared to the bank Nifty. And and the rupee is also been depreciating. But in the recent past, yes, IT has taken a backseat, booking the profit. Today, we have 3 major companies announcing their results: IT, Infosys, TCS, and HCL. Let's see how their results are. And then we will see whether the market is going to be giving some kind of a positive cues or not. But what's the bank Nifty? And though it is in a slow, continuous fall, which has been happening, and we can clearly see our market is also trending to do whatever that the US market is trying to do. Okay, so play based on these lines, and also concentrate on all these aspects which I have explained it to you. During the course of the session, I will be showcasing you whenever there are minor things which is happening in terms of the crude and this. One more thing which I was telling you is the dollar index. What is a dollar index? The dollar which is getting traded against all major economies is being tracked. Here, even the same story here. What is the same story here? Whenever the dollar index goes above a 92, 93, as long as 93, it is good for them. The reason is, whatever the money that they're going to be putting it across in different economies, they will be getting a better return. But when the dollar index, the amount of purchase that they needed to be doing, or when they are going to take back the money to their home country, then they are not going to be making much money. That's the reason whenever the dollar index crosses the 93, 94 mark, many you would have seen big sell-off happening in the emerging economies. So you would have seen last 60, 70, 90 days wherein the FIs were net sellers continuously, almost they closed to sold it to 60,000, 70,000 odd crores, right? Why it was happening? Underneath, the dollar index might be one of the reasons, because they are not comfortable as long as the dollar indexes keep spiking. It went to close to 96, 97. If you have seen this in the last 1 year, in a table, can you see this? It was hovering around that 90, 92, 93 mark. Only in the last couple of months, it went to 94, 95, 96. Now, after 97 odd range, it has come back to 95.5. If it is going to be going lower, below 93, it will be good. If it is going to be staying above this 95, 96, then it is not a good sign for the foreign institutional investors. You can expect further sell-off to happen. But in case if this guy goes to 100, 101, 102, then expect further sell-off to be happening. So keeping a track on this dollar index is also important, because this can also give you a clue how the momentum is going to be there. Okay, so Shiva, like, where do you get all these news? Where do you track all these things? Guys, I use the Bloomberg, as I showed you. I use CNBC. I use Reuters. I use AFP. I use wherever you will be able to track the international news, you needed to go and track it. Don't just blindly think like in one or two elements and then like you can, wherever you are able to get the news, go through that. So as I told you, I use Bloomberg, I use CNBC, US markets, and then I use the Reuters.com. I use the AFP, and then whatever the news which is coming in from important Twitter feeds from CNN, all these like in a major news channels, I track all of them. So I would expect all of you to do it. The reason why I say that is initially, even I was not like in following all these news channels or anything. The more you track, the more information you get, and that will be easy for you to correlate. Guys, trust me, I'm not at all a finance guy. Okay, I'm totally new to this, and whatever the information which I have collated, I'm just sharing it with you. I know many of you would be like having much better knowledge than me in terms of like tracking it. If you're already doing it, please continue to do it. Okay, so these are the areas where I continuously doing it. Guys, increase in dollar index is not good for placing their money in emerging economies. Instead, they will move their funds into developed economies, because they are not going to be making much funds in India, because the amount of like a dollar at which they needed to, because they are not going to be getting that kind of a return. So what they do, they take back the money and then invest in a market where they will be getting a solid return, which is going to be US economies or like in Japanese or like in where the economy is set to boom. So always dollar index rise, it's not good for emerging economies, especially for countries like India. Now in the last 1 week from 97 odd zone, it has been falling. That's a good sign. Let it go below 93. 93 should be a threshold. Anything above 93, usually it is not a good sign. Anything below 93 is a very good. Same way for the crude. Anything less than $60 is a very good sign, because we have seen the long-term averages playing out in that range. But anything above that, like in 70, 80, there will be a lot of like an economist coming on the TV channel saying that like no, Indian economy is going to crash because of this, that, and other things. But it's not going to be crashing. It's going to be because the cost of money at which we needed to buy the crude is going to be higher, and naturally you will tend to see the inflation and everything spiking. That's the reason the fear is going to be coming in. Okay, so even today, why there is some kind of an underperformance which is happening in our markets is purely because of the crude angle can be. Why? Because Bank Nifty, which was supposed to be rallying like crazy with like a global market support and other things, still we are not able to do it, because they are somewhere expecting, oh no, man, the crude factor is coming into the picture. I thought like the Fed is going to be the one, but now the crude is somewhere coming into the picture. So slowly they will be start to think. And one more reason, the Bank Nifty on a daily chart, it is in the extremely overbought territory. So be careful with that. Don't try to like carry long position unless and until you get a solid signal. Even you can see even on the like an intraday moves. What is that which I'm seeing on intraday moves? Look at this. Usually by this time you would have seen like in 2, like in 3, 4, 50K bars or anything in terms of the volume. Hardly any volume which has been happening in the markets, which is clearly suggesting me that though the market is going higher and higher, not much of traders who are interested to go and take a trade in this market. They are just playing for the day, which is clearly suggesting it's an avoid day for me to take a trade at this juncture. There are no significant signals which is coming in. Please stay light. There is no like a reason for you to do it. So how the Fed will affect? Guys, imagine if the US markets is going to increase the rates. If the US markets, why these guys are coming and deploying their money in countries like India and others? The reason is they are getting the money cheaper at US. They wanted to put that money somewhere where the interest rates are going to be higher, so that whatever the move that can be done in the bond market and other thing, they will be able to enjoy the benefits. But if I'm going to be increasing the rates in my home country, why would I borrow and then invest in another country? When I'm going to be getting the same kind of a return in my country itself, why should I borrow and then put it in a country like India? I will do it rather in my country itself, right? That's the reason we needed to be tracking the Fed and what the action that they have been doing. And okay, so many people have this conception, right? Shiva, what you're saying, the things are going to be happening next month, following 6 months, 6 months down the line, 1 year down the line. Why they needed to react today? Yes, that's what the market is all about. Have you ever wondered how the market behaves? I'll just give you a simple synonym. Earlier, I used to be very, very puzzled about the market. It's all a myth, right? What is a myth here? 1 year down the line, the rates are going to be increased, but the fall will be happening today. 1 year down the line, the rates are going to be increased, but the fall will happen today because the news will be coming out today. Reliance will come and say, I'm going to be debt free by 2023. Okay, they will have 100 1 lakh crore of debt. They are going to be saying only a word that I will be debt free by 2023. Today the market will rally 5-10%. Okay, it is all a future projection. You do not know whether that's going to be happening or not, but the market likes to hear the commentary, what they are able to get it. Tomorrow, the same Reliance will again fall 5% down if they say our production has gone down by 5%. That too in 2023. So you would be wondering, guys, yesterday only you raised it 10%, and the following day you're reducing it by 5% because the news is what is going to be taking the market higher and lower. Okay, when the actual news, when the actual event happens, you will not see much of things happening. 2 years down the line, when the actual event happening, you will not see much is happening. It is always buy on rumor, sell on news will be the market play 90% of the time. So something which is going to be happening 2 years down the line, we are predicting that they are going to be profitable, and then we do it. How many of you are holding Zomato shares? Anyone on your portfolio Zomato shares? Okay, there are a few bravehearts who are holding it. Got it. Why you guys are holding that? Any particular reason? The company is a loss-making one. The company has been from day one, they have been a loss-making company. And they have not even sure whether they will, even their management is not knowing that whether they will be profitable or not. But expectation is somewhere down the line, our Indian economy, so all the Indian users will only order food from Zomato. We will not cook at home at all. And Zomato will become one of the profitable companies in the world. And they are going to be paying dividends and everything. And my share prices from 130 or 140, which I bought, it will go to 300, 500. Or you would have got an option, no other option, wherein in the IPO, you were in stock would have got allotted just because others are applying. Everybody is asking me to apply. I would have applied. I got a stock. And I thought it is coming at a cheap price of 130. Let me hold it because all other IPOs are coming at 1,000 rupees. Let me at least apply for this one at 130 rupees. These are the things which you would have done, right? But honestly, it can become a multi-bagger or it can become a zero also. No one knows it. And most of the things, if you'd have gone back and looked at the history, every 20 years or so, whatever the companies which has performed in the previous decade or more, they would have all underperformed in the next decade. Okay, not necessary all of them will be performing all the while. These guys are there in the industry this 10 years. Next 10 years, you may not be able to see it at all. Okay, so everything is possible. So don't just blindly think and invest thinking that, no, I'm going to be profitable all along. And this company is going to be profitable and I will buy whatever it is. There's the same story. They sold it to me when I bought in Suzlon stacks in 2009-10. They told me like in India is a renewable sector is going to be the growth story in the next 10 years, and Suzlon is going to be the leading the way. I bought that story, and then I bought like a big time in Suzlon, and that too not at like a high price. The Suzlon was falling from 400, 500 odd zones to 100, 200. I bought it from that level, and I was holding it till rupees 5 or 6, and then I exited that stock. Why? I believed in that growth story. Everybody sold it to me because Suzlon is going to be the next like in renewable. Huh? So those are the things which is going to be happening. Not necessary everything which is going to be like a shown rosy picture is going to be performing better. But yes, there are few companies which will give you rewards. There are few companies which is not going to be giving you rewards. Accept both with pinch of salt and then move on. Okay. I always insist players don't buy in one or two companies, buy in a bulk. If you're buying it in like in one or two and expecting it to perform, sometimes it may not. The biggest regret, I don't know, like, and I've shared this story several times. I will again regret one thing. In 2007 and 8, when I was holding a portfolio of 10 lakhs, I sold my portfolio when it became 1 lakh, thinking that I'm doing the best thing for my 1 lakh because I'm saving the last 1 lakh which is there. But that is the worst thing which I've done. And more importantly, out of all the 10 lakh stocks, 99% of the stocks would have given me negative returns in case if I'm holding it. I would have had like 1,000 to 1,500 odd stocks of Bajaj Finserv, which was, I got it at somewhere around 270 or something, and I sold it at somewhere around 200 odd. You know what is the stock price today? It is around again 18,000 or 19,000 or 20,000. Okay. And the important thing is it would have given me like in so much of dividends and bonus shares and everything that one stock could have given me like a multi-crore returns. But the problem with me is any novice trader who will do in the market, I have done that. What is the mistake? I thought I'm saving it because the entire stock market is crashing and this particular stock is also going to crash and I don't want to be there in any. So I booked a loss in everything, including all the blue chip names during that time, the DLF, the Unitech, the RNRL, the JP Associates, the like in Tata Motors, the ICICI Bank, everything which I had. The only stock which I should have held on to is the Bajaj Finserv. Even when you're maintaining a portfolio, don't just buy one or two. When you're like having a multi-asset class, like in a multi-asset, like when I say like you needed to diversify into different sectors, even in different sectors, try to invest in different companies in the sector. Not all companies in a particular sector will perform, but one or two companies in that particular sector can give you a multi-bagger returns. So when you make money, one stock or two stock is enough for you to cover not only the losses which the other 90% of the companies make, it'll also give you significant return. That is something which I've learned. And I did the same thing in 2013-14. I got a significant 100-150% returns. That was an awesome experience. But don't do the same mistake what I have done. Okay, you needed to and yes, sometimes we will try to safeguard. You will see that happening in future years as well. When I say future years, it can happen this year or the next year or following year. When you see a stock market crash, okay, when you see a stock market crash 30, 40 or 50%, you will see all the prices going faltering pretty bad. Okay, even in March 2020, you would have seen almost all the stocks crash by 40, 50, 60, 70% also. If it had been smart enough, yes, you would have bought it at the lower level and held on to them. Don't try to just focus on one company, diversify it in different sectors. Okay, that is something which is very vital. Don't try to deploy in one company only. Akash, as I told you, I will not be giving too much importance to the future rates. I will be giving more importance to the live rate. Bhargav, check your internet connection because others are absolutely having no issues. Guys, you guys are having any issues with my voice or able to see my screen? Okay, great. I think, guys, people who are having internet issues, please check it on your end because we do not have any issues at all. Okay, guys, whatever the minor snippets which I'm sharing it with you, all this is not only going to be helpful for your intraday trading needs, it's also going to be helpful for your positional needs. Why I say that? When you have a choice to make, now you have made a choice. How many of you are wanting to only become option buyers? 80% of them would say yes. Why? because you do not have like an sufficient capital for you to like and write like an options. So you wanted to be like an option buyer and you wanted to. But as an option buyer, we have like in certain limitations. What are those limitations? You may not be able to scale up as like in a seller, wherein in seller's case you will have like in plenty of options to do the adjustments and other things. As an option buyer, you are at the mercy of the sellers, because sellers are the ones who will be creating the position. We will be going in detail on that. So when you have a limitation, don't keep thinking that no, I needed to keep increasing my like, and I needed to keep compounding. Always remember, you will be getting into like in a stage wherein you may not be able to scale up. You needed to know, okay, this is my maximum threshold and I cannot be able to scale up beyond this level. Once you feel that, do not even try to compound or do not even try to compete with anyone. That's very important. Why it is very important? Because you should know your limitations. Without knowing your limitations, if you're going to be keep thinking from today 1 lakh, tomorrow 10 lakh, day after tomorrow 1 crore, from there 5 crore, you may not be able to have the same mindset to do the option buying the same way you're doing it with 1 lakh and 10 lakh. Option buying requires a lot of skill compared to selling. Why? That is the most difficult job in the trading. Okay, any person you would like and ask, they will say option buying is not like an easy one to do, and it is like and the one which is going to be like, and you will continue to lose it. How many of you like and being an option buyer continuing to lose? Tell me honestly, you are continuing to lose being an option buyer. Why are you losing? Have you ever wondered why are you losing? People who are winning, yes, you would have known what is that you wanted to achieve it in the market. But people who are losing, I will tell you the simple reasons why you have been losing. First is the discipline. Next, you would have achieved your target, but still you would have been doing over trading. Next, you do not know what you wanted to accomplish in trading on that particular day. Fourth, even though you would have been able to get the right entries and other things, due to your like an what to say weak hands, you would panic when the market turns against you and you will book your loss. The same, when it is going in your favor, you will wanted to book your profits immediately, but you when it is going in against, you wanted to book it as and when it goes to the lower level. And the last one, you will not enter when the market is giving you an opportunity, but you will enter when someone wanted to get an exit. You will go and buy it from that guy, and you would have bought it at a higher level, and that guy would have happily left it to you. Correct? How many of you have done all these factors which I have said? 99% of you would have done everything. Why you guys are, how am I able to say this? Very few would be able to be successful in option buying. And it took me several years to do that. Okay, it took me several years, and like I can say by the time I would have blown my account 100 times more than that. Why? Because each and every time one or two of these elements will automatically come and impact me. Unless and until you bring a discipline to your process, you should be knowing what you wanted to achieve something. Imagine in my scenario, like why I chose like an option buying as a like in a career and then like and became a full-time trader. It's purely plain and simple. The most important element, till the time I wanted to earn money from my money from market to run my family, I always failed. This is a simple, most important rule. Till the time I wanted to earn money from the market to run my family, I always failed. Why? I'm coming into the market thinking that somehow I needed to earn 20,000, 30,000, 40,000 to pay my bills, to pay my EMI, to pay my rent, all these things. Automatically, you are putting a pressure on yourself on day one itself. Correct? And another thing, some of you would have taken a loan to take a trade in the market and lose it. I luckily, like, and I didn't do that mistake. But third thing, when you can become consistent, only when you know that whatever the money which I'm bringing into trading, I can afford to lose. If you don't bring in any money which you can't afford to lose, you are putting yourself under a tremendous pressure. Why I say that? Because once you lose, imagine you have like in 1 lakh. You know this is your last 1 lakh that you can do it because you don't have any other like in savings or anything, and you have not even shared your like in a trading story with your family or with your spouse, because you know if I'm going to be sharing my like in trading story, my family will think I'm a gambler and they are not going to allow me to do the trading. 90% of you, even like in attending the session, now you would have told your family, no, I'm not, I'm just like in listening to this guy who is like in saying something. I'm not even paying anything, ma. I'm just like in listening to him. He's giving me a free session, you know. I'm not going to be like in taking any sessions. Correct? How many of you have said that? Because we all try to hide it. Okay, we don't want to, because what if they think I'm a big failure? What if they think, oh no, man, this guy has lost huge money, this guy is gambling, let me not like and ask him to do anymore. You are in the fear thinking that what if your family doesn't approve of what you are doing? That's the biggest problem with many. One thing which I realized, even I was in that same boat. Only when I shared my story with my spouse, then I started to gain more confidence. Okay. Then like and I made her understand, yes, I have lost big money. Whatever, like and not only you, like in whatever the saving which you have like and had it, I also lost that. I shared it. Then I found a way. Okay, I have like disappointed her and I have like literally let her down. Somehow I needed to come back. How I can do it? I needed to learn, and I also needed to know how I should not be giving it back much. But yes, during the course of the journey, you will learn several things. But the most important aspect, somewhere you needed to take a choice and then let your family know. Don't try to keep and take all the things with you, and that is going to be putting up a lot of pressure on yourself. Why? Because even if you win one day, you will not be able to share the joy with anyone, because you would have incurred so much of losses. You are in the process of gaining it. You will not be able to share it. Either it be a joy or a sorrow, please share it. That will give you a lot more freedom. That's the reason I keep insisting people, if you're not able to share it with someone, you can always put a message to me so that I will listen to you. But don't keep it with yourself. Okay, it's always necessary. Let it out. Let it out. Because trading is a very lonely profession, unlike other industry, because you're going to be sitting alone, taking your own trading decision. You're going to be your own boss. Think on those aspects. Okay, because trading is one of the most stressful profession, but let me tell you, it will be the most enjoyable profession once you know what you wanted to accomplish. Once you know what you wanted to accomplish. When I thought about myself, when did I become successful? Only when I put in the money, when I know. I told my wife, okay, I was running a company, and then and I had some surplus capital and other things, and I told her, baby, I'm going to be taking this much of amount. Okay, I know I have sufficiently safeguarded you and the kid and everything. This amount, give it to me. I'm going to be using it no matter whether I lose it or win it from the market. It's not going to have any impact on our family, and this will be the final amount. I'm not going to be touching anything beyond that. Okay, then I told myself, Shiva, you got the approval from your wife. Now you got your capital. You know what is that which you wanted it. What is that? You don't need to earn any money from the market. Why you don't need to any money? Because you have sufficient money which you think it is good for your retirement and other things. Now you are going to be learning how you can make money from the market. Once I understood it, then I set a limitation to myself. Okay, let me not put my entire capital. I started with 5 lakhs. Okay, I wanted to see with this 5 lakh how much I'm able to do it for a period of consistency. Then I set a target for myself, if I can make 5,000 a day. Okay, earlier I didn't think about the 1% rule and other things. I kept only the 5%, 5,000, sorry. Then I was able to do it like in 15 days, and then and I was able to lose on 2-3 days, and I was losing too close to 20-25,000. Then I realized, Shiva, your winning is only 5,000, but when you're losing 25-30,000. So how are you going to correct it? Then I decided, okay, whatever I do, I needed to do it with a stop loss. Without the stop loss, sometimes my mind is saying, Shiva, hold on to your trade and other things, and you're losing big. Then from 5,000, okay, perfect. I'm achieving it. Once I achieve that 5,000, I closed it. Then what I did is I started to use my previous day stop loss as like a previous day profit as my stop loss strategy. Then my mindset changed. Why? Imagine when you're getting into the market today, thinking that whatever the money which you have made yesterday, you are ready to lose it. Then automatically the first thing which is coming is your capital is protected. You're going to be losing only the money what you gained from the market yesterday. Then my mind gave a positive start in the morning, and I told myself, Shiva, you're ready to lose 5,000 in your opening trade. Done. If my opening trade is like losing 5,000 or 6,000, then I will exit the market and then stay light, because I can consider that particular day is not mine. Imagine there are days wherein I would have lost 15, 20K also. Yes, I needed to accept it, then cut down my thing. What if my previous day is a loss? Imagine today is a loss, tomorrow what I will do? Then I will only use 10% of my deployed capital as my stop loss. I know that is the only risk which I needed to afford to take, because if you are into options, you needed to prepare yourself to lose before you gain. That is something which I keep putting it in my mind. Shiva, try to make it like in whatever the plan which you have it. So say for example, yesterday, how much I made? I made around 1 lakh. So what is going to be my stop loss for the beginning of my trade today? 1 lakh. Once I made 25,000 in the morning trade, I made around 25,000 between 9:15, 9:16. I'm out. 25,000 is made. So now what I will do? I will protect my previous day profit, which is my 1 lakh. That is the only way you can safeguard your previous day profit, right? Why? You have made some money today and use that money as the stop loss for the remainder of the day. Now, morning trade, I made 25. What will be my next trade? And what will be my stop loss? I can use this 25,000 as my stop loss. And one more thing, I'm not going to be doing in the same login, right? I'm doing it in another login. Why am I doing it in another login? Because I wanted to protect the profit which I already made. Usually our mindset, what it does, when you have made money and then you lose something out of the 25K, your mind will not be able to accept it. Your mind will say, Shiva, somehow you needed to like and get the 25K back. When you are in the process, you will lose more and more, and then you will start to feel like a negated, or you will have like a negative mindset, which is something which I'm trying to say. The stop loss strategy and then the like in a multi like an account, these things have like helped me a lot in the last 5 years. And one more thing, you need to know when from 5K I scaled up, right? After 3 to 6 months, I was like in looking at my capital, it has almost doubled. Almost like in a fourth month itself, for 5 lakh, I got into like a 10 lakh category. Then I realized, okay, Shiva, now you're good to go. Instead, from 5 lakh, I didn't go to 1 crore. Okay. What I did from 5 lakh, I increased it to 10, 15, 25. Then I slowly scaled it up to 1 crore. It's always important. Don't go from first bar, like in a first, like in a step to the 10th step immediately. Take one step at a time. Don't increase your capital from 1 lakh to 10 lakh in a day. Okay. From 1 lakh, go to 1.5, 2, get yourself comfortable with that particular capital. See whether you are comfortable, confident, and consistent. Then increase it slowly. When you will be in a hurry to do it, you will be in a hurry to do it only when you have a loss in the past. You always have a tendency. Our human mind is like that. Whenever we make money, we will immediately start thinking about the past losses, because you know today you have made 20K and you think the market is going to be like and making you everything like and big. In that scenario, what you will do, you will keep on taking a trade again and again and again. Whatever the gain which you'd have made in the morning, you will start to lose in the afternoon. Never ever do that. Even after this session, after like a 7th or 8th or the 9th session, you guys will be start to look at like in the trading, because by the time you will understand the whole concept, it will take 7-8 sessions. But after 7-8 session, if you are a newbie, what I want you to do is, I want you to start with one lot for me. Okay, if you're a newbie, especially in the options market, I want you to start with one lot. Prove me after 3 months that you're able to be consistent. Out of the 60 trading days, I'm able to be consistent for 50 days at least. Remaining 10 days, I'm not losing more than 2 to 3%. If you are able to do that, then after 3 months, we can think about scaling up. Why I wanted you to do it for 3 months, not for 1 month or 2 months? The reason is you needed to see different market pattern that is going to be evolved. And during this course also, it's not going to be complete pattern. You will see like an over a period of 2 to 3 years, you will see like in different patterns emerging. But at least you would have survived the 60 days for you to see how the market patterns have changed and how many days I've been winning, how many days I've been losing. Imagine out of the 60 days, you are not having like an, more than 40% of success rate, then I wouldn't even suggest you to increase your capital. I would still say just hold on to your existing one till you become confident. Because there are certain things, if you're not able to do it with one lot, what is the guarantee that you will be able to do it with 10 lots or 100 lots? There is absolutely no way. Guys, art of making money is pretty easy. Once you find the knack, whatever the things which I was losing it over a period of like in 10 years, I was able to recover it in 2 years. But I never went into the intention of recovering it. That's what made me to recover it. Always remember, whatever the money which you have lost it in the market, gone. It is like in the money which we earned as a salary, we spent it on ourselves. Everything is over by the month. That's exactly I wanted you to consider for trading as well. Once whatever the money which you have earned, if you have lost, forget about it. No point in keep thinking that no, somehow I needed to recover, somehow I needed to recover. More you say the word recover, more you have an option to lose it. Guys, that is something which has happened to me, and I can correlate with 99% of you. The reason is all of you will be in the same boat. Tell me honestly, like, and have you not heard the story before? Because it is all looking like your story, right? 90% of you will be able to directly correlate with your story. Why? Because I am just another guy who has been there in the market, who done that and then came here. And I'm telling you, guys, this is what I've done. And this has like burnt my fingers. And I'm telling you, don't do that. And if you're going to be doing it, you wanted to try and test yourself. No. I won't believe Shiva's story. I will go test myself to see like and whether it is really a fire and whether it is going to be like an burning my finger. If you wanted to do it, yes, you can, but the price will be a little bigger. Again, imagine your like a finger getting burned. You need to go visit a doctor, put a burn all, or like and put in like in a nice bandage. By the time you come back and take a trade, it will take some time because you would have run out of funds and you needed some more funds to deploy in the market, and all those things are going to be happening. So one thing which is always like an excites me about trading is, as I told you in the previous session also, it's very important we come into the market with knowing what we wanted to accomplish. Many people ask me, Shiva, like in currently you are doing like in 1 lakh a day. Why are you not increasing it? Guys, tell me honestly, when I make 1 lakh a day, even if you're going to be like in going to the best of restaurants, best of hotels and other things, what will happen? You will not be able to spend that 1 lakh in a day, right? We do not know what is our need and the necessity. That is what is forcing us to take everything in a day itself. 90% of the time, we wanted to make it big or we wanted to compete with someone. Yes, this is not going to be a competition. No one is going to be asking you how much money you made except you yourself. First, realize you are not competing with anyone. You are competing with yourself. You needed to show an improvement in yourself from today to tomorrow, tomorrow to day after, and so on, rather than saying, just because user A has done that, user B has done that, he has achieved that, and I needed to overtake him. Guys, this is not a race. I'm telling you honestly, this is not a race. You are going to be earning it for yourself. None of them is going to compensate when you're going to lose money, or none. You are not going to be sharing your profit with anyone. Put that in your mind again and again and again. I don't want you guys to feel I needed to overtake this guy. I needed to overtake that guy. Guys, market is going to be there. You needed to know how much you wanted to do it and what is that your expectation is. Try to compete with yourself. See how you can betterment yourself rather than competing with someone. Only when you realize that, you will be able to be there on the right life. Okay, please understand that. Many people ask me, Shiva, like you are making 1 lakh, your participants and your trainees and others are making 10 lakh and 15 lakh. I'll be the most happiest soul if they can do that. Why? Because they have set a benchmark at 10 lakh and 15 lakh. I have set a benchmark for me at 1 lakh. Just because my participants is doing 10 lakh, if I'm going to be competing, then I'm not going to be following any of the risk management. I can do a gambling. Guys, there are days wherein I have made 25, 25 lakhs, 30 lakhs. It didn't give me the satisfaction. Why? Because I would have made 25 lakhs, I would have lost 35 lakhs. So those days, I still don't remember. You know, when the maximum satisfaction where you will get it, even when you make 1,000 rupees and when you followed the process and the process has given you a result, that is when you will feel that, yes, this is what I wanted it and I got the result. When you're buying something at 30 rupees and when you're seeing it going towards 100 without you knowing why it went, you would not understand the importance. Though the money will excite you initially, but you will not feel that happiness. I'm telling you honestly, this is what I have felt it. Whenever I have followed a process and it has given me a result, even though if it is a small profit, I would be so happy rather than looking at a larger and a bigger profit M2M, even if I made it. Because that has not excited me. Because I know I have gambled, I have not traded with the discipline. So remember that whenever you take the next whenever you're taking the next trade. Guys, why are you focusing more on the mental game more than the trading activities and other thing? To me, if I don't fine tune your mind initial 2 days, even after 20 days, I can't fine tune you. Okay. I wanted you guys to fine tune your mind first. I know, because everybody would have come into the market with some kind of an expectation. That expectation is absolutely true. And you will be your own boss if you just follow this over a 10-year or 15-year down the line. Whenever you guys are going to be meeting me again, you will definitely be, I will be in a so happy space to see you guys again in 5 years or 10 years down the line, because there are people whom I would have mentored 5 years back. They're all in a very happy space. Some of them are conducting their own training. Some of them are co-speakers with me. Some of them are doing very well in life. That is what is going to be making me happy. What are those things that they have done? The one thing which you guys have failed, they are doing it is they are just doing it with discipline. That's the only thing which I would expect from all of you. Guys, my job as a mentor or a trainer, you guys have paid me the fees and I'm happy with that. And I know I have made money and you guys are going to be learning something, but that's not going to give me the real satisfaction. The real satisfaction I will get is once I see you guys 5 years down the line. Yes, Shiva, after the session, I have followed it. I know initially I was a little bit struggling, but I've maintained it. And then over a period of time, now I can see the, what are the things which you have said. Guys, I am just going to be I have planted a seed. I'm just watering it. And I'm not going to be seeing whether the fruit is going to be tasty or not. It's you who are going to be tasting it, because it's your garden and I have planted it and I have poured the initial water, and you are going to be pouring the water every day. And 3 years, 5 years down the line, when the fruit is going to be there, you are going to be the one who's going to be enjoying, not only you, your family members, your kids, your grandkids and everybody. But that particular day, if I visit, you guys are going to be giving me a fruit and telling me, Shiva, this is what I got it as a fruit. I'll be so happy to see that. That's exactly I wanted to get it from all of you. With that, now we will move on to the next topic. Guys, don't worry. We will be going in detail on how we should be taking a trade, what is going to be my stop loss level, how much I needed to deploy. Everything will be there. Okay. So guys, we have plenty of time to go through all of that. But first, I wanted to take it one step at a time. Let's take some baby step. I know many of you wanted to just you just got up, but you wanted to run. But market will not. Whenever I have ran, immediately I have fallen. So, and I have faced a lot of obstacles. I don't want you guys to have a similar kind of an obstacle. Okay. So let's go one step at a time. Now, we will take another 10-minute break. I'm going to be talking about an important subject about the open interest after this break. That's going to be very vital. Please do not go anywhere. Go for a loo, come back. Your break timing is just for 10 minutes only. So we are getting into the most important aspect of open interest, how the derivatives market and other things. Don't worry, what do you needed to do after you lost and everything, we will discuss. There are plenty of things. Thanks guys, and some of you would be doing that. Guys, the lunch hour, I will plan it at 2 o'clock if possible. We will do that. 2 o'clock, we'll go for the lunch break. Thank you guys, we'll be back at 1. Okay, so team, we are back. Team, there have been like a few queries on other topics as well, but I'm not able to respond to all of them. Please avoid it. As and when we complete it, please note down your queries. Okay, so I know like we will be having a 2-day session, and I know like a lot of you wanted to learn different things, but considering the time and other things, I may not be able to like and go into the different details. But once we complete it, we will have like a Q&A session which will be there for 2 days, wherein we will try to address all the queries. I sincerely like and say that we will make the best effort to make use of this 20-day sessions to like and learn as much as possible so that it is beneficial for everyone. Okay, so moving on. I'm just going to be skipping this India Wix and I will be coming back. Why I say like because for me the OI is going to be very important, which is going to be very crucial tomorrow when we are going to be having the live session. So yesterday and today we are like having a session on this. So tomorrow it will be like a live session to see how things are. So tomorrow you will be wondering like, and what are these guys doing it and other things. By next week you will be having a lot more clarity. So in order to do that, today we'll be looking at the OI data and what it is and why it is and why we needed to be looking at the OI data, what makes it to be super interesting on the OI data and everything. Okay, so talking about the OI, what is this open interest? How many of you know what is open interest and like and how you needed to read this open interest data and everything? Let's do a quick questionnaire. Okay, so some of you who would have attended, and some of you would have seen like in various videos, you would have known what is open interest a bit, and you would have like learned it. How many of you have gone through the precursor document which I shared it with you? Everybody? Okay, great. So that document would have given you like in a rough like in a glimpse of like in how you needed to be looking at the open interest data. Let me give you a basic like a guideline of how I understood it and why I consider open interest as my god. Okay, so first of all of us wanting to trade in the FNO segment, because we are like not looking at the way we look at the markets, the way FNO segment moves, we don't see the same thing in the stock. Imagine the stock moving from 250 to 260 will be a great joy for many investors, right? Whenever they see a stock performing on a single day, 250 to 260, they will see like in a great joy. But for an FNO trader, Bank Nifty on a particular strike moving from 250 to 260, it's like on a normal day. We don't even give too much of importance. The same 10 rupees, if it is a stock, we get over enthused. But the same 10 rupees, when it moves in like an index options, we don't like and feel so much happy. But the same 250 goes to 500, we so happy, right? That is how the FNO segment has changed every mindset of a trader. That is a common mindset, like a common change between a trader and an investor. Investor, even a 5 or 10 rupee move, like in 2 months or 1 month back, when the ITC stock moved from 220 to 240 in a single day, everybody like in the entire Twitter world was like and so happy, because everybody's like, hey, Twitter is like, sorry, the ITC is now breaking out, it is going to be going 200, 300, 400 again. In a matter of days it came back to 200 again. But in Bank Nifty, every day we see the option prices move from 200 to 500, 500 to 100, 100 to 600. We would have seen the entire hangama happening. That's what the FNO segment is all about. So what is this futures and option segment? There was a market wherein only the equity segment was trading. Okay, when I say equity segments, like and only like and you can buy stock and sell stock. So what if the like and if you're like and getting some good things about the stock, like and if you know that that particular stock is having like a lot of growth and momentum and everything, you will like and people will go and buy that stock, and as and when it performs better, they will be like in selling that stock. Imagine you are buying it at 100, when it goes to 150, 200 over a period of time, you sell it, or if you wait for it to go to 1000 and then you sell it. That's the way the like in stock market operated. But there come a day, okay, our market and every market is like an interconnected with the world and everything. There are days wherein you go to sleep, you buy like an 1 lakh quantity of like an Reliance. Imagine you bought it at 1000 rupees, you bought 1 lakh quantity, and then you go to sleep. But overnight, there has been a big like in a war which has erupted between like in Gulf and US or something. Okay, there is a Gulf country and the US, there is a war. Imagine the Gulf war which happened. What has happened to the crude prices overnight? It all like in skyrocketed. Why? Because of the demand, because there is not going to be like a much of crude, there is going to be like in plenty of disruptions, and the crude prices is not going to be available. The crude is not going to be available. The crude prices skyrocket overnight. In that scenario, imagine if you are a seller who would have sold Reliance shares, then you will be under a soup. But if you have bought it, the Reliance is going to be skyrocketing the following day. You will be like in happily like in taking the profit. But imagine a guy, or imagine a situation where there is an like a situation where the crude prices crashes. What will happen to the guy who would have bought the like in 1 lakh quantity of Reliance? Next day morning is quantity like in the quantity whatever that he has been holding, he has to incur a loss. Why? There will be a gap down opening. Why? Everybody wanted to sell like in what to say the crude stocks. They don't want to be there in the energy sector at all. This is not your problem. You bought it thinking that like in the economy and everything is booming and you're going to be seeing like in a massive growth for Reliance, and like in energy prices are going to be going high. But overnight, there are things which has happened which is beyond your control, and the following day you are getting a gap down. When you are going to be facing a 20% or 30% haircut, what you will feel? You will be feeling completely like an what to say helpless. Why? Because this is not in your control at all. That's when the exchange is told, okay guys, we will come up with a concept called derivatives market. What is this derivatives market is all about? Whatever the positions which you guys are taking it in the cash market, we will give you an option for you to hedge in the derivative segment. So here, if you have bought the cash, if you have bought Reliance like an equity, then you can hedge your positions or create your positions in the like in futures and options market, so that if there is going to be any overnight volatility or intraday volatility, you can safeguard your position. That's the way the FNO segments came into the picture. They have created an in like an what to say and segment which is to safeguard the equity investors. But over a period of time, what has happened now? We all started to like in a trade naked in terms of whatever that I wanted to buy and sell, only I will do it in the equity, like in a FNO segment, not in the equity. How many of you are hedging your positions honestly? I have a portfolio of like an 1 crore and I'm hedging my positions in the FNO. Are you doing it? Only 1 or 2% of the traders would be doing it. 99% of our traders, we only take naked trades. Correct? That's what we have been doing. So here comes the play. Okay. Now comes the most important thing. What is that? The FNO segment. So, you know, cash market, you may not be able to short sell. Short sell is not allowed in the cash market. You can sell it, but you have to cover the positions by end of the day. You cannot be carrying it over in the, like, you know, what to say, overnight. But in futures and option, they are giving you an option. What is that? Imagine you are buying some 1 lakh quantity of Reliance. If you wanted, you can sell the futures in the option, like in futures market. Why? Imagine if the market goes lower tomorrow, whatever the selling which you have done in the futures market, it is going to be giving you the profit. But you will be losing something in the cash market. But it is not necessary for you to create like an 1 lakh quantity you have here and 1 lakh quantity there. No, not necessary. You can hedge your positions to an extent where you feel, okay, even if there is going to be like in a massive, like in a fall, some of my loss will not be that big. Even if it moves higher, my loss on the future segment will not be that big. That is the way the futures and options market came into the picture. But we all started to trade on a different level altogether. Here, the most important thing which I want you to understand again, the futures and options segment, it is for big traders wanted to hedge their position, whatever that they do it in the cash market segment. But over a period of time, many traders started to trade this particular futures and options without even taking any hedge or anything. Now, the most important element, how does the futures market or the options market move? How many of you know how the futures market move? Does it move automatically? No. It moves based on the underlying or the spot or anything. Okay. Now I will give you a simple, like in a calculation, how you need it to be looking at. Look at this. This is Reliance. This is the Reliance equity, which is trading at 2,511. This is future, Reliance future, which is going to be expiring on 27th Jan, which is trading at 251610. What is the premium at which it is trading? The premium at which trading is, how you needed to calculate it? You needed to calculate 2515 minus 2511. That is the spot. So the premium is around 4 rupees. Correct? Futures minus the spot is the premium at which it is 4 rupees. Why it is trading at 2515 instead of trading at 2512? Why the futures is trading at 2515 instead of 2512? You can say it is the interest, it is the like a time value and everything. The most important factor for me is a guy who is buying this at 2516 is expecting the spot 2511 to come and close on 27th January at this price. What is that? Again, I repeat, a guy who's buying the future at 2515, why is he expecting to buy this 3 or 4 rupee premium? He is thinking that by end of this expiry on 27th Jan, the price on the cash market is expected to come and close this at this price. Okay, that means he is expecting the equity cash is going to be having in demand and it is going to be giving you another like a 3 or 4 rupee move and it will come and close it. But he's not going to be buying just because it is going to be closing at this exact price. He is expecting it to close much higher. Why? Because only then he will be able to book the profit, right? If he's going to be closing the position at the exact level of like in 2514, he's not going to be making money. But he is having that expectation, guys, like, and for the next 1 week or so, I'm expecting the Reliance to like in spike higher. Why Reliance has spiked 2% today? Can anyone say? Now you guys are getting into the understanding. So what has happened to the crude, international crude prices? I gave you the clue also, right? What is the international crude prices happened last night? It has all rallied 3%. If it has rallied 3%, naturally the energy sector is going to have a demand. Why the crude prices are going up? There is a demand which is going to be there. And most importantly, who's like in a major private producer or like a major refinery in India in terms of the like in crude and other things? It is a Reliance. So who's going to be the biggest beneficiary? Reliance, the ONGC, the like in what to say, the GAIL, and these guys are the ones who's going to be having all these big play which is going to be happening. Why? Because these guys will be able to like and come like and what to say, get a better margin. They will be able to sell it at a higher price. All those things are going to be happening. It is all on expectations, correct? So naturally the prices has gone up by 2% today. So the guy who's buying it at 2514 still thinks that no, 2510 is not the right price. By end of the expiry, I'm expecting the market, the crude, like in the Reliance, to close much bigger or higher than 2514. So that is the expectation at which he is buying it. So what is going to be happening here? Okay, what is going to be happening here? 2510. What on the day of the expiry, that is on 27 Jan at 3:30 p.m., the prices closes at 2510. If it closes at 2510, what will happen to the guy who's buying it today on the futures at 2515? He will lose 4 or 5 rupees, correct? He will be losing 4 or 5 rupees. Yes. So the futures market, you will be able to buy and sell. In futures market, both buyer and sellers will be there. They can buy and sell thinking that what is the price you are expecting it. What is that is called as? That is called as speculating. You are speculating, or you can say like, and you are determining, or you can like and say predicting that the market or the particular stock is going to be going and closing at this level, and I'm buying it. That is called as the speculation. You are speculating this particular index or particular stock to move toward this level, and it is going to be going and closing at that level. So now you would have got a fair idea how the futures market is trading. Here, what the exchanges have done, they have said, here you can buy it at one stock. You can buy one stock, one like a quantity which you wanted to buy, you will be able to buy it. But what they have done it with the futures is, they said, here we will give you in a lot size. We will not be giving you in individual unit size. Instead, we will give you in lot size. You can buy it in a lot. Either you wanted to buy or one lot or two lots or five lot, or you can sell one lot, two lot or five lot, whatever that is based on your capital. But one interesting factor, when you're buying one stock, you need 2,500 rupees. But what exchanges have done is, when you're buying like in one lot, imagine you wanted to buy 250 quantities into 250 quantities into 2,500, you will require 6,25,000. But imagine you just wanted to buy 250 quantities. Imagine I'm buying it at 2,500. Okay, I'm placing an order. The exchange says, you don't require to pay me the entire like in 6,25,000. Just pay me upfront of like in 142,610. Okay, because I'm not expecting the like in a stock price to move like in pretty drastically, but like in even if there is going to be like in a moves and other things, still I will be able to like and see the amount of margin that is required for you to buy. You can only like in this much. Now you know the reason why many people trade in the futures and option segment. If you needed to buy it in the cash market, you would require 6,25,000. Whereas the exchanges are saying you can come and play in the futures and option segment. We don't ask you for that much leverage. We will give you an like an advantage. If you think that the market is going to be moving higher or lower, you can only pay like a percentage of that. Like, and let's not go into the margin calculations and other thing. That will be like in a big story. So you're going to be playing only the portion of it, and you're not going to be playing the entire money. So now you know why futures and option segment attract more and more people. Today, the cash market turnover is only 41,000 crore. That means people who are buying and selling the cash stocks, they have only traded for 41,000 crore. Whereas the FNO segment has traded so far 46. Can I see that? It is almost like a 46 lakh crore. Almost 10 or 20x there, right? So what they're doing, guys, like, and I'm not going to be making much money in the cash segment. If I buy and sell it in the future segment, I will be able to make much bigger money. Okay, 46.67 lakh crores they have made it. So that's a huge sum, correct? Why they are doing it? They know the amount of transaction which I needed to make it here, I can make some big profits here. That's the reason many people prefer it here. Again, who has the control of the price of the options or the futures here? If someone is buying and selling in the like in cash segment, that is what is going to be determining the price movement of the futures or the options. If the futures or options is like an having a high premium or high discount, what is the premium? If the stock future is trading much above the spot price of the respective stock, it is called as the premium. The same stock, imagine if it is going to be trading at 2490, the spot is trading at 2505. If it is trading at 2490, the future, then it is called as it is trading in a discount. Why it is trading in a discount? Because it is someone is expecting it to be trading in that particular level by that expiry. So currently we placed it at 2,500. Let me cancel that because the price has been falling. We just wanted to show you that. Okay, now I think I will cancel that particular stock price. Now, so If the stock future is trading in a like in a 4 or 5 rupee more or 10 rupee more, that is called as a premium. The same future trading in a discount, that is like an if it is trading below like in the like in a spot price or the intrinsic value, that is called as the discount at which it is trading. Or the person who is buying or selling it, he thinks that by end of the expiry, that particular stock is going to come and close at that particular level or below that level. Understood? Everybody got an idea now? Why and how the futures and the cash segment is operating? This is like a basic thing. I don't want to go into detail. I wanted to give you all a basic glimpse of how it is going to be. Got it? Now, one more thing which I will be saying to you. Yes, the price will be determined more by the demand and supply than anything else. Okay? The price will be determined by more on demand and supply than anything else. Imagine if the stock price is trading at 2,500. If I feel by end of the month, the energy prices are going to be going higher and the Reliance stock can go to 2,600, I would be ready to even buy it at 2,540, 2,550 also. Why? Because by end of the expiry, I'm going to be getting another 100 rupees. I'm ready to pay another 40 rupees now itself. So not always you will see all the stock prices will be like in trading very close or anything. It will be like in, say, for example, I'll be getting the Reliance result, okay, in the next 2-3 days, or Reliance result in a week's time. The Reliance result is going to be absolutely positive. And based on that, I'm going to be getting a gap up of like in more than 5% on that particular day. For that, I will be start to buy today itself because I know I'm getting it at 2,520. This is a very good price. What if tomorrow the price goes to 2,540? What if it goes to 2,560? So some traders, they will be ready to pay the premium and then buy it. Because imagine, like in watching a Rajinikanth movie, how the Rajinikanth movie tickets will be sold. 10 days before the movie, you will be seeing the counter prices at 300 rupees. When it is going nearer and nearer, the same movie ticket will be sold at 350. On the day of the release, entire movie ticket is sold out. You don't have any tickets available. Someone who is standing outside the theater who would have bought it 10 days before 300, he will be willing to sell it to you at 600 and you are ready to buy it. Why? The movie release excitement on the day you wanted to see that movie and you wanted to enjoy it. The same way the Reliance stock on the day of the release, what will happen? It will be at 2,600. You are still ready to buy it because you wanted to participate in that rally somehow and it is going to go to 2,700. But you do not know until the movie is seen whether the movie is a hit or a flop. Only after seeing the movie, you will be saying, oh shit, man, for this movie, I bought a ticket at the black. Now the movie is sold and then now it is gone. Correct? The same thing will happen to the Reliance result as well. You are thinking to buy a movie, thinking buying the stock, thinking that the movie is going to be a hit. The Reliance result is going to be a hit. After Reliance is announcing, no, to this quarter, we don't have much of margins. We had incurred a loss and other things. It becomes a buzz and then the prices fall crazy. The same thing happened, right? Once the show is done, the second show, people will be asking for the feedback, and if the feedback is not good, you're not going to watch the movie. Automatically, the prices will fall, and the guy who is selling the ticket at the black will be saying, "Now I'm ready to even sell it at 300. Please give me my cost." The same thing will happen to the option also, or the future segment also. The prices will be crashing on the day of the result, and then it'll. If the movie is very good, people will be buying the same movie ticket again and again because they wanted to go and watch the movie for the second show, third show. Some of them watch all 4 shows on that particular day. The same thing will happen in the market as well. If the Reliance result is good, you will buy the same stock at 2,550. You will buy it at 2,600. You will buy it at 2,650. You will buy it, keep on buying it till you get bored out of it. Are you able to see a correlation? How the demand and supply works? Not only works in the movie industry, it also worked in the respective stocks as well. Are you able to see the correlation? Guys, the main reason why I'm saying it is all a correlation. Okay, how the interest in the movie industry to this, how you will be like in seeing it, because you are a common man, how you will react to in like in a common scenario. We all like can react based on that, right? In earlier times, we wait. Why we wait? We wanted to hear the first day, like in the first show, guys, what is their feedback? If it is a great movie, we will go and watch it. If it is not a great movie, we will watch it in a DVD or like we will watch it in like an OTT or platform or anything. The same way, if the result is good, you will go and participate it. If the result is not good, why I needed to participate in Reliance? I have another movie to watch. There is another movie which is playing in a nearby theater like ICICI Bank. I'll go and trade in ICICI Bank rather than trading in Reliance. This is exactly we all do it. That's exactly the demand and supply here. If the movie is going to be interesting, people will buy it. If the stock result is interesting, they will go and buy it. If it is not, they will avoid. And people who would have bought, they will be literally looking for some like and people who wanted to come and catch up, and they will be ready to sell it at any price because they would have already bought it. This is where like the distributors and others, like and say for example, if you are a distributor of a movie, you know how the movie distribution works, right? How the movie distribution works. When the movie is in a production, the distributors go and meet the producer. They say, what you guys have done. We have taken 30% of the movie. They will show a run through. What is a run through? They will show whatever the shots that they have taken. They will only show as if whatever the best scenes that they have taken so far. They will show a few dialogues of Rajinikanth of that movie. They will say, guys, Rajinikanth have delivered like a great performance. The delivery and everything has come out good. Look at this. Look at that. People, the distributor who will feel, hey guys, they are spending 100 crores and I'm expecting this movie to like make me a millionaire. I'm ready to buy it at 200 crore because it is going to be giving me 300 crore. They will go during the movie production itself. They will go give 100 or 150 crores. Now, producer got the money. He has to just make the movie and give it because already the distributor has given the entire cost of the movie, because producer would have thought about all the cost included. I need 100 crores. He would have sold it at 150. The distributor, now he has to market the product. He has to showcase as if like, and what is the movie worth and everything. Only then you will be able to make the money. On the day of the release, though Rajinikanth would have delivered like in great performance, if the director would not have had the great content, what will happen to the movie? It will flop. The same thing applies to the cash or the stock as well. Reliance is a great name. Okay. Ambani would have told 1,000 things 3 months before. As a producer, he would wanted to sell the product. You know, Reliance is a great name. The movie name is good. The movie producer is good. But at the end of the day, if the company has not delivered the results on the result day, what will happen? This particular quarter, the stock will become a buzz and it will fall 5%, 10%. That's what happened last time, right? When the Reliance results came in, none of them liked the results. Though the Geo numbers were good, underneath they showcased every month the Geo numbers are good. Geo numbers are good. Everybody went and flocked the Reliance shares. But on the day of the Reliance, day of the results, except the Geo, all other factors, the margins were lower. They were not able to meet the expectations and everything. Reliance shares fell 2, 3%, 4%. So that is exactly will be happening with all the stocks. Don't just go blindly buy based on the stories which you hear. Sometimes you can do it. Sometimes you needed to know whether it is going to be giving you the result. I went and bought the same story on ICICI. I didn't buy it on the Reliance because many investors or many like distributors were ready to bet on ICICI then Reliance. Why? Because looking at some of the similar genre movies which is coming in during that period. I was looking at similar genre movies similar to ICICI Bank. Some of the corporate banks were giving great result. That helped me to go and take a trade in ICICI because you would have seen it. When a particular brand of movies getting hit, all the movies in that particular genre will get hit. There will be a period wherein only a comedy genre will be getting hit. There will be a period only thriller movies will get a hit. There will be a period only like horror stories will get a hit. You needed to understand that and go along with that. If you think that No, today is like an all genres. Now I will go and make a kids movie that is going to be a hit. Then you will be into a different wagon because you are targeting a different audience, and if that audience is not coming in, you will lose it. The same thing will be into the stock markets as well. Go with the momentum and go with the sectors which is performing in that particular quarter, rather than you being like an thinking that no, this like in sector everybody is buying it, I will go and buy something in a different sector, this is going to be giving me a result. That's when you lose it. Always understand this simple logic, how the demand and supply works. Always be there with the demand rather than with the supply. If you are thinking about buying it, if you wanted to sell it, you needed to be there with the supply guys more than the demand guys. Even in supply, I'll tell you the logic and how it needed to be applied. Understood now how the simple stock can move or come down based on the demand and supply? If there is no demand, the price can trade in a discount. If there is a demand, the price can trade in a premium. Futures, simple as that. Clear? Now, on the futures and option segment, why futures is being allowed by both buyers and sellers, but in options only sellers are allowed? Can anyone say? In future segment, both buyer and sellers will be able to buy and sell. I'll just show you something here. I will keep it very simple, guys. I don't want you guys to like, and because I'm a guy who will always be like an what to say, guy who will be. You can consider me like a guy who would have understood everything from the market perspective. I don't go into Greece, alpha, gamma, nothing. Okay, what are the things which I've learned? I've kept it very, very simple for all of you. Okay, that's a way I'm going to be explaining it to you, and that's a way like, and I have also learned it. Can you see this? You are seeing a live like a trade which is getting ticked. You see this quantity, and then like an buy. If it is a buy, it is showing you in green. If it is a sell, it is showing you in red. Okay, green means someone has bought it. Red means someone has sold it. It can be like in a fresh buy, or it can be a fresh sell, or it can be a position which was like an unwinding, or it can be a position which can be long unwinding as well. Anything is possible. We do not know. But what the exchanges have done is they said, guys, at least for the futures, I know there is a spot which is available for me wherein I can determine a intrinsic value. But for the options, there are possibilities some of these can expire worthless. So it doesn't make sense for me to have both buyer and seller do it. I will have only seller do it in the option segment. But in the future segment, I will allow both buyer and seller do it. Why? Imagine by end of the expiry, I'm not expecting this Reliance price to go below zero, or I'm not expecting this Reliance price to go to an like an abnormal levels. So the Reliance is going to be having some kind of a cash value at the end of the expiry on Jan 27th. Maybe it can go to 2,400, worst case 2,000, worst case 1,500, if even if there is like a 50% fall or whatever it is. So what can happen to this Reliance stock future? It can go and close at 1,500 rupees to the maximum. So here he is saying, I will give an equal opportunity for both buyer and seller. Okay, I will give you both equal opportunity for you to like and determine where you can speculate, whether you wanted to be a buyer, whether you wanted to be a seller. But one thing which is going to be very interesting here, what is the margin which we required to buy this one? How much margin we saw if we required to buy, if it is a Reliance? We required almost like an 1,45,000 something, correct? One lot. What if I wanted to sell this? One sec. I'm not sure whether I will have the capital to do that. Pending. Okay, got it. Okay, it is the same. Still, it is fine. Great. I thought the selling will require a much bigger margin here. Yes. Now considering the other things, yes. Now earlier, like, and we used to have like a higher margin requirement and other things, but now they're given you an equal opportunity, whether you buy or sell. You will have the same kind of a margin requirement. Now, one sec. Pending, nothing. Now comes the good, like another question here. So you have an equal opportunity whether the market goes high or low. You determine what you wanted to do with. Either someone is expecting it to sell, someone is expecting it to buy. The guy who is buying it, what is his thinking? He is expecting the market to be keep moving, the Reliance stock to be keep moving so that he can sell it at a higher price. The guy who is selling it at 2513, he is selling it because he feels, no, the market has already rallied a lot. The strike, stock prices rallied a lot. By end of the expiry, I'm expecting a 10 or 20 rupee correction and I will book my profit. So what is the obligation for these guys now? The guy who has bought it, in case if he is buying it from someone, if he has bought it at 2,500 rupees from someone, he cannot be buying it without someone selling it, correct? You can place only your orders, someone has to sell it. He has bought it, okay, at 2,500 rupees. A. He has bought it at 2,500. Now, B would have sold it at 2,500. On the day of the expiry, the price is around 2,600. What they should be doing now? The guy who bought it at 2,500, he will sell it on the day of the expiry at 2,600. He will pocket 100 rupees. This guy has an obligation to buy it back at 2,600. The reason is the spot has closed at 2,600. So he has no other option. The exchanges have told, guys, the spot price on that particular expiry is 2,600. If you have bought it at 2,500, I will give you 100 rupees profit because this guy has sold it at 2,500 to you. I will collect that 100 rupees and then give it to you. That is how the money is moving in from one to another. Share market is a zero-sum game. So someone has to win it, someone has to lose it. So where are you gaining that money? That means someone would have sold it at that particular level and he has obligation on the day of the expiry to give it to you. Clear? What if you what will happen in case if you are not closing your position? The exchanges will settle the price at that level. Now they are there are a few things which has happened right on the options market. Similar to that in the futures market also, they will charge some a penalty or levy, and the stamp duty charges will be higher in case if you are not closing it. But still, you will be getting the part of the profit. There will be some charges levied so that your profit may come down from 100 to 80. The 20 rupees will go to the exchanges and whatever the broker and others, but the remaining 80 will come to you. But the guy who would have sold it, he has to give back 100 rupees. Otherwise, you will be getting the notices and other things. That is the way Dinesh is getting caught now, right? All those things are happening. The rollovers and other things, yes, you will be able to see it in the brokers allowing it. In case if you feel that no, I don't want to sell it this month, I will want it to carry forward to the next month, you needed to check with your broker and they will be allowing you a rollover. Guys, yes, physical delivery is a must for all the futures and options in the stock segment. That is what SEBI has mandated it. I would simply say one thing. in case if you feel that you wanted to trade in the futures or the option segment. What you can do is the first 3 weeks for the current series, you can do it. And for the last 1 week, you can do it in the next series. Guys, yes, it is for the in the money for all futures and options, but not for all strikes. But Samandeep, what has happened in the last series? Indalco, which was supposed to be like an out of the money, in the last 30 minutes, it has become in the money. No one will know that, right? So how will you know that it is going to be? Because it is going to be an operator's game. Imagine if I'm going to be like in making the, like in what to say, if I'm going to be making my stock prices fall, then OTM prices can become an ITM. That is not in your control. Okay, someone who's playing a naked, he will not have that control. So that is the reason I'm suggesting people who wanted to play in the futures and option segment, for 3 weeks, you play it in the current segment. The last week, you can play it in the next series. Don't play it in the current series because that is where you will require the margin requirement. And I think SEBI has levied like a clause as well, right? On the first day of the expiry week, you need 10%, 20%, 30%, 50%, and 100% or whatever it is. Like in Guru, we will be able to like determine so many things, but at the end of the day, it is the biggest blunder by the trader, wherein he should not have taken that kind of a risk. Because if he has taken the risk, he doesn't know the like a risk which he is like in playing it with. The SEBI has made it very clear, guys. If you are playing, you needed to have the margin money. If you don't have it, don't even play. Whose mistake is that? Yes, one mistake is from the broker. They should not have allowed the person to buy the option at that particular price if he doesn't have sufficient capital in his account. That is one mistake from the broker end. But I would still say it is an avoid. Okay, it is an avoid. So the most important thing is someone has to buy, someone has to sell. In the future segment, you know how now the price is getting sold. And either you win or you lose how much you are going to be losing. Correct. Done. How many of you have understood how the futures market works now? You understood it? Clear? So don't look any further. Keep it very, very, very simple. Guys, next we will be going into the options. Don't worry. We will get in there. Why another thing? I don't want you to like, what to say, thinking about anything else. Okay, just play it very, very cool. And this is the way I wanted to take it. I want you guys to one more time. I will make it one more time, though you will be able to see the recording. I'll explain it to you one more time. If the Reliance spot is trading at 2,510, the future is trading at 2,516. It is trading in a premium of 4 rupees. Why? Someone is buying thinking that by end of the expiry, the option like a premium price of this like and the stock price is going to be coming and settling at 2,516, and he's ready to pay at that 4 rupee premium today. Why? He's expecting not only 2516, it is going to be going to 2520 or 2530. It is going to be giving him a reward. So as a buyer, he is ready to buy it. So what is the fun for a guy who's selling it at 2516? That seller is thinking, this guy is a stupid man. He's buying something which is worth only at 2513. He's buying it at 2516. Why is he buying it? Anyway, he's going to be losing or giving me back that 3 rupees. But who's going to be smart? That is going to be determined on the day of the expiry. On the day of the expiry, if it closes at 2513, buyer will be a stupid. If it closes at 2520, the seller will be stupid who sold it at 2516. Okay, it is all in the expectation they are buying it. You will see the prices will be like closer and closer as it is getting closer to the expiry. What is happening? Why the premiums is getting decreasing as it is getting closer and closer to the expiry? It's purely because of the time value. The amount of time you have to speculate is today is much bigger. Why? The expiry is happening on 27th Jan. 1, 2, 5, another like 4, almost like 11 days are left for the expiry. As it is going closer and closer, the amount of speculation which you can do is going to be lower. That is the reason naturally the buyers will be coming thinking that is like, now should I be like betting big? Because if the stock price doesn't move, I will be at a loss. Now he has like a time. Okay, as long as the time is there, he's ready to bet against the time. As the time is getting shrinking, he doesn't want it to bet. That's the reason the premiums come down. Okay, the time value will have an impact. But will the time value will have a direct impact? No, not only that, there are various other factors will also like and contribute. Imagine if there is going to be a huge demand. Even one day before, you will see like a 50 rupee premium is going to be there. Some of the option prices is there like that, right? Bank Nifty options and other thing. Not every time the time value is going to be having a huge impact. It also has other factors also going to be contributing it. Like IVs, like in demand and everything is going to be factoring in as well. Let's not get into that. Everything, intrinsic value, the time, the IVs, the like and what to say, product cost and the demand and everything is going to be there. Guys, I have seen there are days wherein on the day of the expiry you will have 1,000 rupee premium also. People still expect so much of volatility. Okay, so don't purely go by only the time value. There are like a demand and supply which is also going to be equally important on that particular day. That's what I have seen. I'm not a technical guy. Okay, honestly, I'm not a technical guy. If you would have seen those things, then I would not have made money. And if you're going to be doing calculations and other things on that particular day, that doesn't work for me. I would normally look at how the demand and supply is there for that particular stock or for that option, how the people are reacting to it and how it is reacting to the news and other things. It is all like an either a Rajinikanth movie or a Dhanush movie on that particular day. Whichever movie is having like an what to say, big interest, that movie is going to be a hit. I don't care whether he is like a Rajinikanth is a big name or Dhanush is a small name. I don't care about that. I only care about whether the movie has a story and that story is interesting, whether the people are willing to go and watch the movie. That's exactly I also want you guys to look at. Okay, moving on now. You guys have understood the futures concept. Now we will look at the options concept. Now I will add some options here and I will give you with an example on the Reliance itself. Since we have seen the Reliance, I'll show you with the Reliance. Guys, are you all with me? I hope I'm going at a current pace, like which is like an equally good for you. I'm just adding few strikes. Okay, great. So people, I know some of you would not be able to catch it up in the first time itself. Video is going to be available. Watch it again and again and again so that it is helpful for all of you. Please do that. Okay, until you get confident about this OI and these concepts, it's going to be very, very like an interesting for you in the upcoming days. I know like, and so few of you would not have understood and like, how these things are working and other things. But now, but slowly when you're getting these glimpses, you will be able to understand how the options market will work. Now, how the options market are working. In futures, both buyer and seller will have an opportunity to buy the futures or sell the futures here. But in the options market, just excuse me, guys. Okay. Mute, you needed to check your internet because I don't think the video is lagging. You needed to check the internet on your end. Please do that. Now, we will just go back to the markets once and then come back here. Do you see direct correlation between the Dow and the markets? Our first dot. Is there some correlation happening? From morning, it was moving. From there, a fall. What was the Dow when we were taking the session before? Dow was trading at 80 points. Now the Dow has fallen almost to 2930. Are we making a new high or making a new low now? Slowly we are making a new low, right? So from morning, this is like the low which is getting created, and we are just following that pattern. Imagine if the Dow goes into minus 50, minus 100, what can happen? Our market can also start to do the profit booking. Correct? It can happen. Okay. Major thing is we are sitting on like in a big, like in a continuous rally. So be careful. Is the first dot working for you now? This is how you needed to identify whether our market is listening to the first dot or not, which is the global market cues. So as of now, it is listening to the global market cues. What are the moves happening? Our market is absolutely listening to it. Perfect. Now, coming into the option segment. What is this options market is all about? They said, okay, Shiva, I'm buying something. Okay. I know I'm buying in cash market 1 lakh quantity, but in futures market, I'm buying 10 lakh quantity because you guys have given me an option to buy at a lesser margin. So I have large capital and I'm ready to play in the futures segment. So what the derivatives have said, okay, you are already speculating in the futures market. I will give you one more options. One more option for you to play in the options market. What is this option market is all about? Anyway, you know that you are expecting the stock prices to go higher or lower or anything. And you are going to be buying the futures at that price. That doesn't make sense. What I will give you also is, why don't you speculate where exactly this future or the spot is going to be closing by the expiry? If you feel this future is going to go and close at 2,600 or the spot is going to go and close at 2,600, I will give you an option for you to buy each and every strike. 2,500, 2,480, 2,470, everything. You can determine your sell and you can sell your products. If you know that you are going to be bringing down the market, you can sell it now. And you can have some buyers come and buy it. And if the market is moving in your favor, you will be able to pocket the entire premium. So here, the exchanges have given an option to the sellers, telling them you can create positions in the both call and the put. What is call and what is put? This is call European, this is put European. That is the name given. What is a call? A call is you are expecting that particular strike price to go higher and higher, or you are expecting this call options to close like an above the intrinsic or the spot value. Imagine if the 2,440, that is, you are buying a call thinking that the price of this is going to be keep closing higher than 2,440. What is the put option? You are expecting that if you're a buyer, you are buying thinking that the spot is going to be closing below this 2,440. Again, it is all a bet which is going to be bet, or like in the speculation which is going to be done by the people. Call, you are expecting the price to go higher from the spot level. Put, you are expecting the price to go below from the spot level. Now, who's going to be creating this position? It is all the sellers. Why the sellers? Why don't you give the option to both buyer and seller here? Here, the problem is sellers have an unlimited risk and they wanted to mitigate that. What is unlimited risk here? Why don't I have the like an option buyers don't have an unlimited risk here? Imagine here, I'll give you a simple math. 2,520 is the spot and you are expecting it to close at the same level. 2,500 CE. Okay. Currently trading at 30 rupees. Okay. On the day of the expiry, 2,500 call where it will be closing. Correct? How it is? 2,500 minus 2,520. whichever call you're buying it, you needed to subtract that from the price at which it is trading or closing it at the day of the expiry on the spot level. On the day of the expiry, the spot is closing at 2,520. 2,500 call, something which was trading at 30 rupees today has lost 10 rupee premium and closed at 20 rupees because the intrinsic value of 2,500 call is only 20 because 2,520 minus 2,500 is 20. Now, what is happening with the market? Big red bar. Okay. So guys, let's see whether there is going to be like a trading opportunity. This I call it as an algo bar. Okay. Whenever you get an algo bar similar to this, you needed to have a follow up. Okay. Don't just blindly go and take a put trade thinking that it is going to be giving you a reward. If there is no follow up, you will definitely tend to lose a lot of money. We will see whether these guys are going to be giving you a follow up. If they are giving you a follow up, then yes, you have a bigger chance of making money. Let's see whether they are going to be doing that. What is the algo bar? Okay, algo bar is nothing. The whole day, the market was trading with like in a low volume here, right? Can you see this? Low volume. Why all of a sudden that big volume bar is coming up here? Do you think it is going to be manually like in done? All these are also going to be done like in auto algo only. But 90% of this time, someone is not putting in like in a big money. Here, someone has come in and deployed the cash or deployed money in every stock which can pull down the index. After this, I will show you like why we needed to be tracking all these things and so on. Why this is happening? This is happening because someone is putting in a basket order, selling all the components of Bank Nifty so that the Bank Nifty can fall 200-300% fall. Okay, now you got a signal on the Bank Nifty, correct? What I'm going to be doing is my system is hanging a bit and just taking a few trades. Why did I take a trade? The reason is here. Okay, we will go into the details in the upcoming sessions, why and how we needed to consider the signal, why we needed to take a trade on that signal and so on. As of now, I've taken a trade. I'm not going to be going aggressive. I will go aggressive only when it is going near to this zone. This is not a two candle theory. It is just an algo trade. But can you see what has happened to the Dow now? What's happening to the Dow? What is happening to the Dow? Something which was trading at 80, 90 points, it has come down to almost 17 points. Guys, these are risky trades. This is just a signal trade and my stop loss would be this. And in case if it goes to this level of 38,872 with volume, I would exit it. Okay, this is a risky trade. And I normally don't suggest this trades for others because it is not a two candle theory wherein you could have been like uncomfortable. But one thing is the Dow is falling and our Bank Nifty is in the verge of like doing a small profit booking. And I'm ready to take a small risk. Already we are sitting on a loss of like close to 3,800. In case if it goes to 380 and like a 370, I'm ready to buy it. And my final like a level wherein I would be aggressive to like do the level is going to be this. Okay, that till that level, I'm happy to just like pile up some positions. And even now, how much capital overall I have deployed? Close to 3%, 3.9%. So I'm ready to deploy this and wait it out. Don't try to deploy all your capital in a single trade. After this, we'll go there. So what is that which I'm seeing it on the OI? There is a massive like a long unwinding happening. And some people are like unwinding their position. And the most important thing, my first dot is slowly faltering. My biggest dot is going to be the Dow from almost 80 points. It is in the verge of going into the negative territory. Correct? It is in the verge of going into the negative territory. Let's see whether it is going to be giving me a reward or not. But I'm just like seeing whether it goes here. That is the area wherein I will be aggressive. Now it has gone and then given me some kind of a move. Correct? What I will do is I will first trail some of my quantity, which I got it at higher level, so that I will have some profit for me to move for the next trade. I wanted to see whether it crosses the 4010, 410 mark. It is not able to cross it comfortably, which I would have expected it to be done. It is not. It is just hovering around. It is not triggering even our trailing stop losses. It is okay. Again, from 6,000 profit, we are back into an almost 7,000 loss. Now I will be keenly watching this trade to see what is going to be happening. Now, what is the Dow doing now? Can you see? This guy is floating between the 0 and the 15, right? It is not able to scroll higher or lower or anything. Now, once again, it is trying to falter. Keep it ready. I've given up some close to 450 quantities. We are back again with 5,000 rupee profit. Now my BEP has gone to 395. That means till 395, I'm not going to be losing this trade. If it crosses 410, 411, I will trail it again. Considering I've already achieved my target, I'm just going to be going very slow, just to showcase you how you will be able to play these kind of small trades and still achieve your targets. Now, in case if you feel, no, Shiva, I don't want to lose this trade, then you can place your initial stop loss at this level, wherein I'm not going to be losing anything. Even if it triggers, I will still be coming out of the profit. Look at this. It has gone below that level. Now it has triggered it. I could have booked my profit at 5,000, but it has given me gone and triggered my 400 rupees level, whereas my BEP was 395. Now it is going towards 392. Correct. What am I going to do? I will add few positions. Why? Why am I adding few positions here? I'm adding few positions because still it has not gone beyond my stop loss level. Correct. I've added few quantities. Now it is again 395. We bought it. Some of the quantities didn't get triggered. We got around 225. In case if it goes to 380, I will add some more. Now, this is how I take multiple trades. How will I do that? From 395, my BEP has come down to 383. Why? 388, sorry. The pure reason is since I had some profit, that profit is helping me to take the next trade. I use my previous profit as I tell you, right? That's the only way I can build my profits again and again. Now, as long as this level is not getting broken, I'm happy to be taking the trades. And most importantly, though this is an algo bar, on the way up, I'm not seeing significant volume coming up, which is a very good sign for me. Now, I'll just go quickly look at a couple of other factors as well. I just went with the signal. I didn't concentrate on this, but yes, now I'm getting some kind of a clue. What is a clue you're getting it here? People who have already attended the session, this is for you guys. There is an unwinding happening here, or a short covering happening here, and then the OI is going up, which is a sign which is suggesting me that some of the writers are coming in on the call side now. Correct. Now it is again somewhere to that level of 404 to 406. Our buy price was somewhere around 395 or something, right? Can we trail it? Sometimes it may hit my stop loss. I'm just waiting for it. Since we have taken a risk, I'm just like, and look at that. It is just like, and whatever the stop loss which we place, it is hitting it. I'm just adding few more quantity. I booked that one, and again I've added it. How many of you noticed that I've closed my position and took the next trade as well? 406, 408, we took it. Again, I bought it at 410, thinking that it is in the verge of a breakout. And again, I got around like a 225 quantities. Now again, I will be trailing it above my buy price. Sometimes that's where you will be feeling that, right? Oh no, man, it triggered my trailing stop loss and I couldn't like capitalize on it. Now, where will be my BEP now? Even if it goes to 383, am I going to lose my capital or am I going to lose only my profits? Can I place my like in a stop loss at 385 now? Is it going to be making an impact to me? No. But if it is falling now, is it going to be giving me a large profit? Yes. Now, will I have a chance to lose it? I've booked it. Now, how many minutes we were there in the trade overall and how much money we have made? 10K. We just followed whatever the systems were suggesting. 157, to 205. 1, 2, 3 trades. All 3 trades we were able to successfully exit, and we made money and we scalped, and then we are out. The last scalp we came it out 425 to 427. Now it is trading somewhere around 421. Is it not beautiful? Now what is the Dow doing? What is your big dot is saying to you? What that guy is telling you? Is it making sense for us to track the Dow or not? Now you know why I wanted to conduct this session in the live market. Is it making sense for us to conduct this session in the live market? Are you able to see the correlation? Guys, this is what I wanted to show you. What are the strategies which we learn? We need to know whether it is working or not. Correct? Without that, it is going to be very difficult. I know the experienced traders would have taken the trade, but it is not for everybody to do that. Please stay away till we complete the sessions so that you will get confident. Imagine if you would have bought it at 425, now you would be in a loss. Now we successfully closed it. We needed to wait it out because it has already given whatever the move that needed to be given for a scalping signal. For a scalping signal, all I want is like a 20-30 point move that has been done and out. Is there any signal on the like a scalp? I'll just check whether there is a quick scalp signal today. Just give me a minute. Okay, even there is a quick scalp also, like, and there was a signal and the following candle was a big one. Yeah, that's a good one. There was a quick scalp here and it gave like an exit here. There was a quick scalp here. It would have given a good exit here. Superb. Guys, this is what the market is for you. Okay, can we go back? Yeah, guys, like in hopefully by end of this week, we should be able to release it. That's what I'm expecting it. So if all the testing, everything goes well, the quick scalp signal will be released by, I'm expecting it on mostly by Saturday or Friday. I'll let you know. Guys, this was purely like a signal based on our algo, which was giving us like what to say, it would have factored so many things which we would not have been able to see it on the common man eye. What are the things which it would have seen? One is the global markets falling. Next thing is like, and it has fallen below the VWAP super trend and everything, the key indicators which we have been playing for. Only thing which was lacking is the follow-up, but it would have still thought about how the OI is decreasing on the put side and OI is increasing it on the call side. All those things have been like and factored it. That's the reason it would have given us signal, nothing else. So I needed to just think about all those aspects and then play according to that. Okay, nothing else. Guys, I will be explaining you everything. Don't worry in the upcoming session, because you guys are just like in getting into the second day, right? Guys, yes, all these things are going to be available in all of your OI Pulse. If you're having an annual plan, yes, it is all going to be available. The quick scalp will be released this week, but the signal is already going to be there. The OSPL signal, go and check it in the like an indicator field, OSPL signal, you will find the signal. The quick scalp will be released by this weekend for all Go annual members. So this is like a signal. The in is my entry, out is my stop loss. Whenever it goes and touches this level, I needed to exit it. That is the way you needed to be taking a trade on that one. Nothing else. Guys, anyone who doesn't have the signal, please log out and log in. You should be able to see it. Sometimes if you guys have kept the charts open for several days, it might not have shown that. You needed to constantly close it and then like and refresh the charts. It might be done. I know few of you would have taken a trade, guys, but I sincerely say if you're a small lot player, please stay until like in a few more days. Don't try to, because many people what they do is they think that like I can like mimic Shiva. But Shiva's risk appetite and like an total trade time will be like totally different from yours. Whatever happens, I would just play for that level and then exit that. But some of you, you would not wanting to. You wanted to hold and you love your positions, right? So don't do that. Don't do that. Okay, many of you wanted to go for the lunch break. So before we start the options, we will go take the lunch and then come back. So how is the day going so far for all of you? So it is a fun, right? Learning and then seeing the live trades and how things are going and everything. But yes, few of us doesn't want the lunch, but few of them are like an what to say, desperately looking for a break. Okay, so we needed to consider everybody, guys. We cannot be just like an we just needed to only trade ourselves. Okay, so we will be back by 2:45. We will try to have the session still 3:30, maybe. I'll keep you posted. Okay, so team, we are back. Okay. So what was that which was happening during our break time? How many of you noticed how the Dow was moving around higher and lower and our market was able to like and go lower again, come back? How many of you noticed that? So is that direct correlation which is happening between the Dow and our markets? Why is it happening? Why the Dow has to do all these things when our Indian markets are trading? Guys, wait for the dots to be connected. We needed to complete all and then only I'll be able to connect the dots. It will take few days, but don't worry. FII is manipulating it. So you guys are understanding that. Okay, guys, I don't know how many of you are aware. Who's the biggest player in our FNO markets? It is all the FIIs. Okay, so FIIs are the biggest, like in what to say, biggest players in our market, and they don't only play in our markets, and especially in the options, the futures and option segment, it is mostly played by the FIIs and the HNI guys. DIs don't play in the option segment or in the FNO segment. So they are the ones who play all these things. And most importantly, when they are controlling our market, they also controlling the world markets as well. In the past, you would have noticed, some of you would have been tracking the Dow, you would have noticed during our market time, the Dow would be like in very silent. Once our market closed at around 330, it would have fallen 300 points, it would have more like a rose 300 points. All those things will be happening after our market close. What are they trying to do? During our intraday game, they would have already positioned themselves for some kind of a trade, and they are making sure the Dow is not reacting so that our market has to react based on that. Okay, so now they intraday, you will be seeing all these moves. Honestly, we are all at the mercy of these big players. Guys, you and me might be thinking, no, we will be able to control it, we will be able to buy it, we will be able to sell it and everything. I saw a couple of posts which is like and posted in our Telegram channel also, like a day or yesterday or the day before yesterday. Only because of our Shiva's team, the 320 is moving like crazy. Guys, we are tiny like in molecules in this large ocean. Do you think 100 or 200 or 500 people from our group buying a particular script is going to be making the entire market moving higher or lower? That is what the thinking which we have. You always believe, right? Only when you buy a particular like in a script, automatically the script is going down or going higher. So that is not the case. It is all about their positioning and they do it. Guys, the like an FIS doesn't mean they needed to be awake for all through day and night. They have their they have their teams all along working like in from different parts of the world. Like and you will have large FI groups operating in from Singapore, Hong Kong, Maldives, like in Mauritius, like in US, like in Hong Kong, everywhere. Okay, so don't try to think that we will be able to understand what they are planning to do and then we just follow the pattern. Okay, that's the most important thing. You just needed to follow the pattern and ensure that whatever that they are trying to do, we also try to do. So there are certain things which I want you guys to understand in the upcoming days. Today you would have seen the how the like a Dow reacting to it, right? The Dow, it is giving you a clear signal on how the market is going to be moving along. Okay, many of you wanting to know before the options how the like an result based trade is going to be there. What I will do is I will do a small session on that before I go into the options first, looking at what the Infi and all the stocks are IT stocks are doing. I'll just give you a rough overview. There is Infi guy. What Infi has been doing in the last 10 days or so now. This is like in a chart which will be giving you like an EOD analyzer. Where did I get this like a numbers from? EOD OI analyzer. I'm looking at how the positioning is for the IT stocks for the like in what is it for the result. 1 week before they were continuously shorting. The price has fallen from almost like 1,900 odd zones to 1,822. You can clearly see the sell-off was happening from the beginning of the month. 4th, 5th, 6th, and 7th. Even the OI was like and building up. The OI change is nothing but the addition. The shorts have been adding more positions in these days. And what has happened after the 10, 11, and 12? The market started to reverse. The IT stocks are like, and now again back to being the darlings. Longs are being built up. But where do you see the maximum positioning is happening? Forget about this number. This is like due to the rollover number and other things. But what has been the biggest action happening in the last 1 week or so? Who's having the control? Is it the short means sellers, long means buyer? Okay, who's having the control? The sellers have created maximum position compared to the buyers, correct? Why? The OI change, you can clearly see the sellers have created more position. Even the price was like falling significantly, whereas there was not much which was happening on the move up. This is for current month. Let's see the cumulative data of all 3 months put together. Even the 3-month data is suggesting something similar to that, because the shorts have been building up more position compared to the longs. Now this is for Infi. Let's see TCS. Short build up, long build up, and then a short build up. Nothing much is happening. Today, for some reason, the TCS has fallen like in 1.63. That means someone is not expecting it. To me, based on this, I wouldn't be like too much aggressive on taking either a long build up or a short build up position. Okay, this is not an ideal scenario for me to take a long or a short build up, because both the people have been playing. They are not sure what is going to be the result. One way it is good. They are not giving you any clue, and the action can be happening tomorrow. This is on HCL Tech. What is HCL Tech is suggesting you? There has been a long build up, and yesterday's long build up was like a pretty significant. Why I say that? There was a 4% increase, good increase in OI build up. Price also increased much, which is a very good sign. On the cumulative side, you can clearly see in the next series and the following series, someone is covering their position, which is suggesting me out of the three, HCL is like a little bit like a mildly bullish for me. Next one is going to be like an Infi, and then the last one is the TCS. So if I were you, I will be looking at in this order, and I will also be looking at the Wipro. Wipro will be like giving you a clue. Look at this. The Wipro guys have been like continuously selling. At least in the Infi pack, we saw the buying. Wipro has been on a selling spree, and look at that. The buying volume also and the longs have unwinded their position, and then the shorts are coming into the picture. Wipro will be the biggest weakener, weakened stock in the IT pack among all which we have analyzed so far. But in case if the results are better, Wipro will become the most dangerous one. Why? Always the short covering rallies are the ones which is going to be the most dangerous one when the market reverses, because the shorts needed to cover their position. When they are covering their position, it will rally like crazy. Got it? Okay, so that is a small hint about the what we can expect based on the result at this juncture. Guys, forget about L&T and other things. Those are the stocks which I avoided completely. Those are not even worth looking at for F&O segment actually for me. Okay, so I don't normally look at those guys. Mostly these are the ones which I will be in my radar. Okay, now what has happened to the Dow? Where is the Dow chart? I'll show you the Dow chart. They went lower and then picked up the pace, coming back, went lower, picked up the pace, coming back strong. Correct? Nifty, which went to almost 100 points. Now it is back again at 150. So in the morning, I told you, it is a clearly buy on dips market playing in, especially on our Indian markets with all the things I've been doing. And that's exactly they have done it for the day at this juncture. So if I were you, I wouldn't be looking to short this market, but tomorrow will be a different day altogether. Try to be careful. Guys, Wipro is the weakest of a lot actually, because looking at the data and other things, Wipro looks a lot more weaker compared to any other guy. Now, let's not waste time. We will go into the option segment. We saw about the Reliance future. Now we will look at the options to understand how the options market is going to be operating. Then we will look at it. So I gave you an example how the intrinsic value of the particular call options will be. So in case if the call for 2,500, if the spot closes on the expiry at 2520, we can expect something which is trading at 30 rupees. 2520, where is that? I just gave you an example, right? Okay, so forget about that. So I just gave you an example. If it is trading at 30 on the day of the expiry, in case if the spot is closing at 2520, they will lose 10 rupee premium because the intrinsic value of that particular like a stock option is 20 rupees. So they will close at 20. So the buyers and sellers, they will fight it out. What is the advantage of a buyer here and what is the advantage of the sellers here? Sellers selling it at 30, he knows if the market is going to be closing exactly at the same level, he will gain this 10 rupees. Why? Because he will only like a needed to give 20 rupees to the buyer and the buyer has to refund that 10 rupees, or he would have already collected the premium. So in this scenario, nothing to worry, because as a seller, he is selling it at 30. The buyer knows, oh no man, I'm losing everything and I'm going to be losing like 10 rupees and 20 rupees only the seller has an obligation to give it to me. So he has to gain that 10 rupees. Now, this is for 2,500 call. Now look at it. Imagine 2,540. It is trading at 20 rupees today. Okay. On the day of the expiry, it closes at 2520, correct? On the day of the expiry, 2540 call. What will happen to this 20 rupees? It will go to 0. Correct. Why? The strike price is much below the price at which the intrinsic value got settled, which is at 2520. So 2520 minus 2520 is minus 20. Good thing is, so far, like, and there is no negative, what to say, in terms of the option pricing, it's been there. Imagine if there is going to be a negative option pricing, then the buyers will also have an obligation to give some money to the sellers. In this scenario, the buyer has the capability to lose only this 20 rupees. Seller, he has pocketed this 20 rupees on day one when he is selling the product to the buyer. So what is the like catch here? Now I'll show you in the live example. Spot is trading at 2527, correct? Sorry, 2524, and the future is trading at 2526. Imagine if it is closing at 2525. What will happen to this 2560, which is trading at 40 rupees? On the day of the expiry, 2523 is the level at which it is closing. What will happen to this 2560 40 rupees? It will go and close it at 0. Why? Because this strike price is much higher than the intrinsic value, and that's the reason this will go to 0. Okay, so why? Then the buyers are buying it at 40. This is currently being, look at this. This is what you wanted to look at. Someone is selling it at 39. Someone is ready to like an what to say ready to buy it at 39. Someone is ready to sell it at 39.35. This is the quantity. This is the buyer's quantity, and this is the seller's quantity. So buyers are placing an order. Sellers are placing an order here. Someone is like in selling. Someone is buying it. But always remember all the position which is like in currently outstanding. Just give me a minute. All the current outstanding positions which is available. Look at this 2560, 2560. What is your total open interest here? 405,500. All this 4 lakh quantity has been sold by the sellers to the buyers. So I will give you a small example how this OI concept works so that you will be able to understand it better. This is a 2000 rupee note. Okay. Who's printing this 2000 rupee note? RBI. Correct? Then this is the open interest, one OI. Imagine one OI. Many people get confused with the open interest with the volume. No, don't confuse yourself. RBI is the seller here. He is creating this. From RBI, where does it go? To the banks. From banks, where it goes? To the ATM or like in a cash, like in cashier. So from here, customers are going to withdraw it. From customers, where it goes? Shopkeeper. Why? We go buy something and then we give it to the shopkeeper. From shopkeeper, where it does go? It is again going to the banks. Why? Because customer, like, and he wanted to deposit in the bank, he wanted to pay the money, or he wanted to like pay back something. Whatever you have bought it, you would have taken a loan to buy some product and then sell a product. He is giving back. From bank, again, where they are going to be depositing it? RBI. This is only one 2000 rupee which got created. But from RBI, it goes to bank. From banks, it goes to the ATM. ATM, it goes to customer. Customer, it goes to shopkeeper. Again, it goes to the bank. Again, it goes to the RBI. Is it a cycle? It's a beautiful cycle, right? The same thing is happening in the options market too. Many people get confused. Shiva, like, and how can you say it is only like in the sellers? Sellers will create a position. Okay. He will sell a product. You go buy it as a buyer. From you, another buyer comes and buys it. And then it goes to another buyer. It goes to another buyer until the original seller takes the product back into his godown. If I am a seller who has sold my quantity, I don't care however it goes. Okay, I would have sold it to you at 40. My obligation to buy it on the day of the expiry is if it goes above 40, I needed to buy it. If the intrinsic value is above 40, I needed to buy it from you. If not, I don't have any obligation because I've already paid upfront all my fees and everything. So during the time I've created and given it to you, your smartness is, imagine I am a wholesale player, you are like a retail player. You are buying it from me, you are selling it to some another guy. Instead of 40, you are selling it to 50. That guy went and goes and sells it at to 60. Then from 60, the price doesn't move. Again, the price dropping to 40 because the future price and the spot price is not moving much. Due to the time value, the price is falling. From 60, it has gone to 40 again. You don't want to incur any loss. The third person who bought it at 60, he will be selling it someone at 40. Again, that price falls further. Another person will come and buy it at 30 based on the demand and supply. And then finally, the seller who sold it at 40, right? He will come and then he will see, okay, all the hangama, everything is over on the day of the expiry. Now the intrinsic value is somewhere around 20. What he will do? He will buy it back at 20. So what is the profit for him now? What is the profit for the seller? Good. 20 rupees will be the profit for the sellers. In between, there were few people who bought and sold, right? Did everybody lose it, or there were few people who made money as well? The buyer from him made money because he sold it at a 50 rupees to another guy. There was another person, he also made money because he sold it to another one by 60 rupees. So two people made money as a buyer. Two people as a buyer also lost money. But the guys who are going to be not knowing where to buy and where to sell, those are the guys who will make a loss. The same scenario would have happened today also. Look at this. Look at this price of 2560. The guy who would have bought it at 21, there would have been a seller who would have created the position at 21. There would have been a buyer who would have bought it at 21. Now the price is 38. The buyer who would have bought it at 21 would be making money. The seller who would have created at 21 would be still sitting at a loss. Now, there was a seller who created a day's high 43. That guy is sitting on like a profit or loss now. 43 minus 38, 5 rupee loss, sorry, profit. Because he sold it at 43, now the price is only 38. If he is smart, he will cover his position now. Or if he feels tomorrow, no, the price is going to go to 30, then he will wait till tomorrow. But Imagine a buyer who would have bought it at 43. He would have been at a loss. So there is a concept. People think that no, all the buyers will always be a loser. Correct? All the buyers will always be a loser. It's not the scenario. It is where each and every buyer and seller creates a position where someone is buying it, where someone is selling it. Guys, at the end of the day, it's a net zero sum game. If one has to win, another one has to lose. Imagine today. Okay, we also bought some like an what to say trade. We also did some trade. Correct? Where is the trade? Wait a minute. The system is hanging a bit. You just needed to give it a time. Okay. Look at this. We bought it. We didn't buy it. We would have bought it from a seller or we would have bought it from another buyer also. But we bought it, correct, at 400. We gave it at 408. We gave it at 398. But somehow we exited the overall trade in profit. That's what we did, correct? Overall trade in profit. So either we would have made money from a seller or we would have made money from a buyer. But we don't care who is selling it to us. At the end of the day, as long as the position is available and if we are comfortable that it is going to be giving me a profit, I'm ready to buy it. So whatever the money which I would have made today, this 9,398, it would have lost by someone in the market, correct? Now, look at the price on this one. Imagine if I would have bought and hold this price at 401 to 48. It went to 430 also, it went to 440 also. From there, it has started to fall. If I would have been holding as a buyer, I would have lost it. Who would have gained it here now? It's a very interesting one, right? How, like, imagine as a buyer, I also made money. As a seller, someone also made money, but someone has lost it. Who was the guy who lost it? The guy who would have bought it from me at 408. In case if he thinks that it would have gone to 500 and 600, and if he is holding now, he would have lost it. One. Imagine another guy who would have sold it at 420 or 430 or like who would have created a position at these levels. Will he not be happy? This is what the game is all about. The sellers will also make money, buyers will also make money. In this scenario, imagine if you have been selling the calls today. At 420, there would have been a seller. 500 level, there would have been a seller. 687, there would have been a seller. These two guys would have been at a loss. The guy who would have sold it at 687 would be in a profit. Why? Because the current price is 598. Guys, I'm repeating this point once again. Both buyer and seller will be in profit or loss based on their entry and exit. But as I gave you this example, the position will be created by the sellers only. Because why the position is allowed only by to create the sellers? If you look at this, I'll just place an order to show you that. What is our current overall capital? You just needed to look at it and then I'll show you that. Can you see what is our net including? It is 1507. Okay. Now I'm buying this at 180. 75 quantities at 180. Okay. In case if it comes there to 180, I'm going to be buying it. What is the capital that got like blocked for this? 13,500. Why 13,500? 180 into 75. 13,500. As a buyer, if it goes to zero, they are saying you will only lose this much. I'm absolutely fine. As a buyer, I know if this price goes to zero, this is the entire margin and I'm giving it already upfront and I'm ready to lose it. Done. Now, this 180, if it comes, you will buy it. If not, it'll be just an order and you are not going to be worried about that. Correct. Now I'm canceling this. You have only blocked the margin of 13,500. Now I'm selling the same one at 250. Imagine if it comes to 250, I wanted to sell this one. Okay, I placed an order at sell at 250. Now look at it. What is the margin that there's been like an allocated now? Usually, like how much is the margin should have been there? 250 into 75. Instead of 18,750, why they are collecting a margin of 4,59,000? Why they are collecting a margin of 4,59,000? Why? Have you ever wondered why? Now you know why most of the retail community are into selling, or into the buying. What is the strike? 38,800, right? I'll just show you something. Watch out this one. Can you see the circuit here? The same 38,800, sorry. The circuit limit set for the day is lower level 0.05, upper level is 2120. If this one goes to even if this one goes to 2,120, what will be the maximum loss here? 1,59,000. Guys, please check your internet connection. I hope others are able to hear me. Got it. Okay. Now, why they have kept for the sellers such a massive thing? There are days and option prices can move from 5 rupees to 2,000, 3,000 rupees also. Then in that case, as a seller, your risk become unlimited. Why your risk is unlimited? As a buyer, where is the maximum the price can go? It can go only up to 0, correct? If you're buying a product, it can only depreciate until 0. But as a seller, you do not know, you have no control on the market. There is a black swan happening. Imagine now the North Korea has been putting a lot of missiles in the last 1 week or so, right? Imagine they are just putting a missile, and unfortunately it is going and hitting the Hawaii. Okay, what will happen? Immediately there is